قصة النجاح اللي صارت ويعيشها بيت التمويل الكويتي اليوم بدت من سنة 77 لما تقرر تأسيس أول بنك إسلامي بالكويت، وبدأ منها التاريخ خطواته الثابتة لأهدافه الأكبر، ويكسب ثقة مساهمينه وعملائه أكثر وأكثر، وبدأ يكبر وتكبر معاه الإنجازات، ويقود المؤسسات المالية في ابتكار وتنوع الخدمات سواء اللي قدمها للأفراد أو الشركات. تعدى نجاح بيت التمويل حدود الكويت، وبدت خطة التوسع والانتشار بدول مختلفة في الوطن العربي وآسيا وأوروبا، وتحول من أول بنك إسلامي بالكويت إلى واحد من أكبر البنوك الإسلامية بالعالم. ولأن بيتك عاصر جميع الأجيال، ولأن بيتك يسعى للتطور في كل مجال. يقدم بيت التمويل اليوم نقلة نوعية في الخدمات المصرفية الرقمية والتحول السريع لدخول عصر جديد مع مواصلة الالتزام بالعمل وفق الشريعة الإسلامية. كان ولا زال بيت التمويل الكويتي على قمة المؤسسات المالية الإسلامية بالعالم.
جسرا من الثقة والوفاء يربط فيما بيننا. نحرص على أن نكون نعم الصديق لك، لأن أحلامك تهمنا. نسير معك على درب النجاح، لأن الصديق يدعم ويساند صديقه. نقف إلى جانبك دائما، لأنك اخترت طريق التميز. حرصنا على أن نصمم لك مزايا تستحقها، لأنك تواكب مستجدات العصر. نوفر لك أحدث الخدمات في الجبال الشامخة والسهول الساحرة والشواطئ الذهبية. مهما تعددت ظروفك نمد لك يد العون أينما كنت. مصرف الجمهورية، المصرف الصديق.
DDCAP Group operates in the global wholesale financial markets, providing intermediary services globally to financial institutions that adhere to Islamic and other responsible codes of financial practice. Ethos AFP was innovated to support the interbank and capital markets trade requirements of Sharia-compliant financial institutions. In 2021, DDCAP announced Ethos Terminal, the latest evolution of Ethos AFP, a multiple award-winning automated trade and post-trade services platform. Ethos Terminal brings additional integration functionality to DDCAP clients via an open market environment. This enables users full discretion in choosing trade counterparts and has been developed in response to user demand and Sharia preferences. DDCAP continues to invest in Ethos AFP, working with partners to deliver cost-effective, fully integrated automated solutions to provide our clients with a dynamic platform for their treasury and capital markets activity that also aligns with their Sharia, sustainability and corporate responsibility requirements. DDCAP aspires to connect the global Islamic financial market responsibly, and the development of Ethos AFP and its functionality is integrated within DDCAP's corporate policy formation, including our Sustainable and Responsible Actions Programme and the review and validation processes and procedures of our esteemed Sharia Supervisory Board.
واحد اثنين ثلاثة تشيك 1 2 اوكي
check test 1 check
otherwise it will be okay.
Yeah.
Okay, خلاص.
Only just see.
لا.
One. Check test.
Okay. Okay. Very good.
قصة النجاح اللي صارت ويعيشها بيت التمويل الكويتي اليوم بدت من سنة 77 لما تقرر تأسيس أول بنك إسلامي بالكويت، وبدأ منها التاريخ خطواته الثابتة لأهدافه الأكبر ويكسب ثقة مساهمينه وعملائه أكثر وأكثر، وبدأ يكبر وتكبر معاه الإنجازات ويقود المؤسسات المالية في ابتكار وتنوع الخدمات سواء اللي قدمها للأفراد أو الشركات. تعدى نجاح بيت التمويل حدود الكويت وبدت خطة التوسع والانتشار بدول مختلفة في الوطن العربي وآسيا وأوروبا، وتحول من أول بنك إسلامي بالكويت إلى واحد من أكبر البنوك الإسلامية بالعالم. ولأن بيتك عاصر جميع الأجيال، ولأن بيتك يسعى للتطور في كل مجال، يقدم بيت التمويل اليوم نقلة نوعية في الخدمات المصرفية الرقمية والتحول السريع لدخول عصر جديد مع مواصلة الالتزام بالعمل وفق الشريعة الإسلامية. كان ولا زال بيت التمويل الكويتي على قمة المؤسسات المالية الإسلامية بالعالم.
جسرا من الثقة والوفاء يربط فيما بيننا، نحرص على أن نكون نعم الصديق لك، لأن أحلامك تهمنا، نسير معك على درب النجاح، لأن الصديق يدعم ويساند صديقه، نقف إلى جانبك دائما، لأنك اخترت طريق التميز، حرصنا على أن نصمم لك مزايا تستحقها، لأنك تواكب مستجدات العصر، نوفر لك أحدث الخدمات في الجبال الشامخة والسهول الساحرة والشواطئ الذهبية. مهما تعددت ظروفك نمد لك يد العون أينما كنت. مصرف الجمهورية، المصرف الصديق.
DDCAP Group operates in the global wholesale financial markets, providing intermediary services globally to financial institutions that adhere to Islamic and other responsible codes of financial practice. Ethos AFP was innovated to support the interbank and capital markets trade requirements of Sharia-compliant financial institutions. In 2021, DDCAP announced Ethos Terminal, the latest evolution of Ethos AFP, a multiple award-winning automated trade and post-trade services platform. Ethos Terminal brings additional integration functionality to DDCAP clients via an open market environment. This enables users full discretion in choosing trade counterparts and has been developed in response to user demand and Sharia preferences. DDCAP continues to invest in Ethos AFP, working with partners to deliver cost-effective, fully integrated automated solutions to provide our clients with a dynamic platform for their treasury and capital markets activity that also aligns with their Sharia, sustainability and corporate responsibility requirements. DDCAP aspires to connect the global Islamic financial market responsibly, and the development of Ethos AFP and its functionality is integrated within DDCAP's corporate policy formation, including our Sustainable and Responsible Actions Program and the review and validation processes and procedures of our esteemed Sharia Supervisory Board.
قصة النجاح اللي صارت ويعيشها بيت التمويل الكويتي اليوم بدت من سنة 77 لما تقرر تأسيس أول بنك إسلامي بالكويت، وبدأ منها التاريخ خطواته الثابتة لأهدافه الأكبر، ويكسب ثقة مساهمينه وعملائه أكثر وأكثر، وبدأ يكبر وتكبر معاه الإنجازات، ويقود المؤسسات المالية في ابتكار وتنوع الخدمات سواء اللي قدمها للأفراد أو الشركات. تعدى نجاح بيت التمويل حدود الكويت، وبدأت خطة التوسع والانتشار بدول مختلفة في الوطن العربي وآسيا وأوروبا، وتحول من أول بنك إسلامي بالكويت إلى واحد من أكبر البنوك الإسلامية بالعالم. ولأن بيتك عاصر جميع الأجيال، ولأن بيتك يسعى للتطور في كل مجال، يقدم بيت التمويل اليوم نقلة نوعية في الخدمات المصرفية الرقمية والتحول السريع لدخول عصر جديد مع مواصلة الالتزام بالعمل وفق الشريعة الإسلامية. كان ولا زال بيت التمويل الكويتي على قمة المؤسسات المالية الإسلامية بالعالم.
جسرا من الثقة والوفاء يربط فيما بيننا، نحرص على أن نكون نعم الصديق لك، لأن أحلامك تهمنا، نسير معك على درب النجاح، لأن الصديق يدعم ويساند صديقه، نقف إلى جانبك دائما، لأنك اخترت طريق التميز، حرصنا على أن نصمم لك مزايا تستحقها، لأنك تواكب مستجدات العصر، نوفر لك أحدث الخدمات في الجبال الشامخة والسهول الساحرة والشواطئ الذهبية. مهما تعددت ظروفك نمد لك يد العون أينما كنت. مصرف الجمهورية، المصرف الصديق.
DDCAP Group operates in the global wholesale financial markets, providing intermediary services globally to financial institutions that adhere to Islamic and other responsible codes of financial practice. Ethos AFP was innovated to support the interbank and capital markets trade requirements of Sharia-compliant financial institutions. In 2021, DDCAP announced Ethos Terminal, the latest evolution of Ethos AFP, a multiple award-winning automated trade and post-trade services platform. Ethos Terminal brings additional integration functionality to DDCAP clients via an open market environment. This enables users full discretion in choosing trade counterparts and has been developed in response to user demand and Sharia preferences. DDCAP continues to invest in Ethos AFP, working with partners to deliver cost-effective, fully integrated automated solutions to provide our clients with a dynamic platform for their treasury and capital markets activity that also aligns with their Sharia, sustainability and corporate responsibility requirements. DDCAP aspires to connect the global Islamic financial market responsibly, and the development of Ethos AFP and its functionality is integrated within DDCAP's corporate policy formation, including our Sustainable and Responsible Actions Program and the review and validation processes and procedures of our esteemed Sharia Supervisory Board.
قصة النجاح اللي صارت ويعيشها بيت التمويل الكويتي اليوم بدت من سنة 77 لما تقرر تأسيس أول بنك إسلامي بالكويت، وبدأ منها التاريخ خطواته الثابتة لأهدافه الأكبر، ويكسب ثقة مساهمينه وعملائه أكثر وأكثر، وبدأ يكبر وتكبر معاه الإنجازات ويقود المؤسسات المالية في ابتكار وتنوع الخدمات سواء اللي قدمها للأفراد أو الشركات. تعدى نجاح بيت التمويل حدود الكويت وبدت خطة التوسع والانتشار بدول مختلفة في الوطن العربي وآسيا وأوروبا، وتحول من أول بنك إسلامي بالكويت إلى واحد من أكبر البنوك الإسلامية بالعالم. ولأن بيتك عاصر جميع الأجيال، ولأن بيتك يسعى للتطور في كل مجال، يقدم بيت التمويل اليوم نقلة نوعية في الخدمات المصرفية الرقمية والتحول السريع لدخول عصر جديد مع مواصلة الالتزام بالعمل وفق الشريعة الإسلامية. كان ولا زال بيت التمويل الكويتي على قمة المؤسسات المالية الإسلامية بالعالم.
جسرا من الثقة والوفاء يربط فيما بيننا، نحرص على أن نكون نعم الصديق لك. لأن أحلامك تهمنا، نسير معك على درب النجاح. لأن الصديق يدعم ويساند صديقه، نقف إلى جانبك دائما. لأنك اخترت طريق التميز، حرصنا على أن نصمم لك مزايا تستحقها. لأنك تواكب مستجدات العصر، نوفر لك أحدث الخدمات في الجبال الشامخة والسهول الساحرة والشواطئ الذهبية. مهما تعددت ظروفك، نمد لك يد العون أينما كنت. مصرف الجمهورية، المصرف الصديق.
Cap Group operates in the global wholesale financial markets, providing intermediary services globally to financial institutions that adhere to Islamic and other responsible codes of financial practice. Ethos AFP was innovated to support the interbank and capital markets trade requirements.
We begin with the name of Allah subhanahu wa ta'ala and with the recitation of select ayats from the Holy Quran. For this we have with us Mr. Muhammad Abdullah.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. إن الله فالق الحب والنوى يخرج الحي من الميت ومخرج الميت من الحي ذلكم الله فأنى تؤفكون. فالق الإصباح وجعل الليل سكنا والشمس والقمر حسبانا ذلك تقدير العزيز العليم. وهو الذي جعل لكم النجوم لتهتدوا بها في ظلمات البر والبحر قد فصلنا الآيات لقوم يعلمون. وهو الذي أنشأكم من نفس واحدة فمستقر ومستودع قد فصلنا الآيات لقوم يفقهون. وهو الذي أنزل من السماء ماء فأخرجنا به نبات كل شيء فأخرجنا منه خضرا نخرج منه حبا متراكبا ومن النخل من طلعها قنوان دانية وجنات من أعناب والزيتون والرمان مشتبها وغير متشابه انظروا إلى ثمره إذا أثمر وينعه انظروا إلى ثمره إذا أثمر وينعه إن في ذلكم لآيات لقوم يؤمنون. صدق الله العظيم.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على رسول الله وعلى آله وصحبه أجمعين. Assalamu alaikum wa rahmatullahi wa barakatuh, and a very good morning to all of you. On behalf of AAOIFI Board of Trustees, the technical boards and the Secretariat, I want to welcome all of you, Your Excellencies, dignitaries, speakers, attendees, to this 18th AAOIFI-ISDB Islamic Banking and Finance Conference, which is being held today and tomorrow, 29th and 30th of November 2023 in the Kingdom of Bahrain. I want to specifically welcome all of those who have traveled from outside of Bahrain, from different parts of the world, just to be here with us today. Thank you so very much indeed. If words could only express our gratitude. This conference, as you already know, is being organized by AAOIFI in collaboration with the Islamic Development Bank and with the support of the Central Bank of Bahrain, as well as local and international Islamic financial institutions and other stakeholders. And I must take this opportunity to thank all these institutions for their moral and financial support in making this conference possible. The theme of this conference is Strategies for the Impending Economic Slowdown and a Post-Oil World through Economic Diversification and Leveraging Islamic Finance. And I'm sure you'll agree with me that the topics are not only timely and pertinent, but also promises to be intellectually stimulating and engaging. So with that, and to officially commence the proceedings, may I first request the conference host, His Excellency Sheikh Ibrahim bin Khalifa Al-Khalifa, Chairman of the Board of Trustees, to take the stage and deliver his keynote speech.
بسم الله الرحمن الرحيم الحمد لله والصلاة والسلام على رسول الله وعلى آله وصحبه وآله. الله يطول عمرك. His Excellency Mr. Ahmed bin Ahmed Galib Al-Mubaghri, Your Excellency Mr. Wasim Mansuri, Acting Governor, Central Bank of Lebanon, His Excellency Mr. Lamido, Yuguda, Director General, Securities and Exchange Commission of Nigeria, His Excellency Dr. Sami Suwailem, Acting Director General, Islamic Development Bank Institute, Kingdom of Saudi Arabia, Your Excellencies, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. And good morning and thank you for joining us at this conference. I would like to start by conveying the warm wishes of His Majesty King Hamad bin Isa Al Khalifa, the King of the Kingdom of Bahrain, and His Royal Highness Prince Salman bin Hamad Al Khalifa, the Crown Prince and Deputy Supreme Commander of Armed Forces and the Prime Minister of the Kingdom of Bahrain. Today, we gather here not only as a conference attendees, but as a prominent or promising future for all of the humanity. Excellency, these are indeed challenging times as we navigate an uncertain global economy and a transition post to the fourth industrial revolution, embracing for reshaping, covering, and systematic in every part of this life. In fact, these challenges, it is crucial to recognize that the path to a promising future begins and ends with sustainable Islamic finance. What sustainable Islamic finance offers are timeless, universal, and indispensable objectives, values, principles, and rules, which deliver both a framework and a foundation upon which we can build a resilient economics, protect our environment, and foster inclusive and professional societies. When we talk about sustainable Islamic finance, I would like to focus on two critical areas. The first one is sustainable infrastructure development, and the second one, empowerment of micro, small, medium enterprise, or the so-called MSME. That's because infrastructure is the backbone of economic growth and development, while micro, small, and medium-sized enterprise, MSM, act as the engine that drives that growth. Your Excellency, distinguished guests, one area where sustainable Islamic finance can make a significant impact is by addressing the staggering funding gap of $2.7 trillion for infrastructure projects in 57 OIC countries, as highlighted in the 2023 report, which is published by Refinitiv and which is famously called Reuters News. In the graph, you will see that it is important to understand that sustainable Islamic finance concept is not just about funding projects for profit making. Rather, it is about investing in the future of our societies. Such approach calls for the adoption of holistic, comprehensive, and interconnected strategy, which not only builds physical infrastructure, but also lays the foundation for lasting environmental and social well-being. That's why it is important that we focus on special infrastructure projects, especially those of which collectively addresses a variety of concerns such as energy, water, food, transportation. These projects include the following: A, the promoting of renewable energy sources to reduce carbon emission and mitigating climate change emergencies. And the second is by responsible and effective water resources management to protect against floods and water shortage, and those promoting agriculture through reasonable and sustainable practices to secure a stable and sufficient food supply to us all. Excellencies, distinguished guests, another area where sustainable Islamic finance can make a significant impact is by empowering MSMEs. The fact that OEC countries have an average of 53.2% of MSE per 1,000 persons, which is double of the world average of 25%, underscores their significance in driving economics, diversification, and growth. The central idea to strategically connect them with opportunity in sustainable finance and sustainable infrastructure projects. It is widely recognized that MSME access to capital market is lacking, and which can be overcome through fintech platforms such as crowdfunding and digital sukuk systems. By doing so, we bridge the gap between two powerful drivers of economic progresses. Number one, sustainable infrastructure development and MSE are like two sides of the same coin. When they come together, the results are transformative. By fostering collaboration between sustainable infrastructure and MSME, we establish a model that promotes economic diversification, job creation, entrepreneurship, innovation, and environmental stewardship. Excellencies, distinguished guests, sustainable Islamic finance holds particular significance for Muslim majority countries, as these countries grapple with economic, environmental, and social challenges. This makes embracing sustainable Islamic finance a more imperative, and it promises to not only strengthen our economics, but also lay the foundation for a resilient political and social landscape. It is crucial to recognize that economic strength is a fundamental pillar of political and social stability. When we apply sustainable Islamic finance, we are not just making financial decisions, we are securing the future of our countries against all types of threats. The strategy should be to change our resources in Muslim majority countries into priority projects that are economically viable, environmentally responsible, and socially inclusive. Such an approach will lead to socio-economics and political stability and ultimately prosperity for us all. Excellencies, distinguished guests, with these remarks, I express my heartfelt gratitude for patience and attention. I look forward to a fruitful discussion and viable insight that will emerge from this conference. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
That was His Excellency Sheikh Ibrahim bin Khalifa Al-Khalifa with some very important points on the concept and the application of sustainable Islamic finance. Now, it's my pleasure and my honor to introduce the next keynote speaker, a speaker who actually represents one of the founding father institutions of AAOIFI, which is the Islamic Development Bank. May I request you all to please join me in welcoming one of the leaders of Islamic finance, Dr. Sami Suwailem, to the stage for his keynote speech. Dr. Sami Suwailem is the Acting Director General at Islamic Development Bank Institute based in the Kingdom of Saudi Arabia.
بسم الله الرحمن الرحيم الحمد لله والصلاة والسلام على رسول الله وعلى آله وصحبه ومن والاه. Excellencies, distinguished guests, brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuh, and good morning to all. On behalf of my colleagues at the Islamic Development Bank Group, I would like to express my deep appreciation to the Central Bank of Bahrain for its unwavering support of Islamic finance in Bahrain and beyond. I also want to extend my thanks to AAOIFI for organizing this annual flagship event to bring forward issues vital for the progress of the Islamic finance industry. We look forward to fruitful and productive discussions out of the rich program of this conference. The Islamic Development Bank reiterates its commitment to support the Islamic finance industry in our member countries and worldwide. We deeply appreciate the positive and enthusiastic encouragement we receive from our stakeholders. Together, we will work to amplify the impact of the industry and the value it creates for our societies, especially the youth who will shape the future of economic development. Ladies and gentlemen, inspired by the theme of the conference about economic diversification, I would like to say a few words about diversity, particularly from an Islamic finance point of view. Diversity is inherent to the Islamic tradition, and as we know, the Quran was revealed in 7 modes or letters. These letters are not contradictory, but rather enhance and support each other. This makes diversity part of the DNA of our civilization. Islamic finance, by its very nature, is integrated with the real economy. The real economy thrives on diversity. Trade itself is founded on the exchange of different items to achieve mutual gain. In contrast, an interest-based system, by design, disconnects finance from the real economy, leading to homogeneity and concentration of risk. This structure promotes self-replicating pyramids of debt and speculations, which will sooner or later collapse, causing substantial losses for the vast majority of ordinary citizens. Currently, the Islamic financial industry remains highly concentrated, with around 70% of assets in the commercial banking sector. For the industry to thrive, more diversity is needed. Diversity will be beneficial to all segments of the industry as well as to the larger economy. Digital banking, while greatly enhancing efficiency, may concentrate risk due to network effects. Deposits can move in lockstep, as has been the case with recent bank runs in the US and elsewhere. To control these risks, we do not need to slow down digitalization. Rather, we should ensure sufficient transparency and responsibility in managing the deposits. This will make depositors more like partners rather than lenders who are shielded from the internal practices of the management. With these policies in place, digitalization will enhance the alignment of interest between depositors and management. Not only is this in line with the principles of Islamic finance, but it will also make banks more resilient and stable. With a sound and transparent relationship between the two groups, we can harness fintech for financial inclusion and shared prosperity. Left to its own dynamics, markets will follow the path with the least resistance. This path usually is the path of concentration rather than diversification. Realizing the full potential of diversity, therefore, requires thoughtful strategies and policies to shape the financial landscape toward achieving sustainable economic development. These policies include, for example, establishing specialized institutions to support the development of key economic sectors. For example, the infrastructure sector that His Excellency Ibrahim Khalifa has just mentioned, requiring banks to allocate dynamic proportions of their portfolios across various sectors, constructing sector-specific rating methodologies, encouraging capital market tools and instruments to promote growth in target sectors. It's important to note that diversity and specialization are two sides of the same coin. As Adam Smith observed centuries ago, when individuals and firms specialize, they become more productive and creative. By encouraging specialization at the micro level, we cultivate diversity at the macro level. Specialization and diversity would reinforce each other. Standardization does not preclude diversity. It provides a common language for communication. It helps us understand each other, but that does not mean we have to be like each other. By speaking the same language, we will be able to acknowledge and accommodate our differences. Standardization facilitates rather than hinders healthy diversity. Let me conclude by warning against the temptation of a one-size-fits-all approach. Though it promises quick, off-the-shelf recipes, it is a dangerous strategy. Rather, we should follow the enlightened path of cultivating healthy diversity while maintaining high-quality standards. A balanced approach will better serve sustainable economic progress. Thank you for listening. Wassalamu alaikum wa rahmatullahi.
That was Dr. Sami Suwailem with profound insights. Actually, I was quite busy over there, so unfortunately, I could not pay attention to your speech. I wanted to highlight some of the main points. Actually, what I want to say is that that was Dr. Sami Suwailem with very profound insights, which I'm sure is going to set the stage and the scene for the discussions to follow. It's my pleasure to introduce the next keynote speaker, His Excellency, Mr. Ahmed bin Ahmed Galib Al-Ma'abki. He is the Governor, Central Bank of Yemen. Unfortunately, due to last-minute emergency situation, he was unable to travel and physically attend this conference. Nevertheless, he recorded his speech and shared it with us, which I'm going to play it out for you. This is His Excellency, Mr. Ahmed bin Ahmed Galib Al-Ma'abki, addressing this august audience in his keynote speech.
بسم الله الرحمن الرحيم والصلاة والسلام على رسول الله الصادق الأمين. معي الأستاذ رشيد المعراج محافظ البنك المركزي البحريني، معالي الشيخ إبراهيم خليفة الخليفة رئيس مجلس الأمناء، أصحاب المعالي والسعادة، السيدات والسادة الحاضرون جميعا، السلام عليكم ورحمة الله وبركاته. كان ودي أن أكون حاضرا معكم في المنامة، عاصمة مملكة البحرين الشقيقة التي نكن لها نحن اليمنيين كل الود والتقدير، وتربطنا بها وبشعبها علاقات عميقة ومتميزة، ولكن تأتي الرياح بما لا تشتهي السفن، فنذيك لبعض التطورات الطارئة التي نعيشها نحن في اليمن باستمرار حالة دون سفري، فأرجو قبول أسفي واعتذاري. في البداية يسعدني أتقدم بالشكر الجزيل لمصرف البحرين المركزي ومعالي الأخ المحافظ الأستاذ رشيد المعراج على دعوته الكريمة والترتيبات التي وجه بها، والتي تعكس كرم وأصالة شعب البحرين الشقيق وعلى رعايته لهذا المؤتمر. الشكر موصول للشيخ إبراهيم خليفة الخليفة رئيس مجلس الأمناء لدعوته الكريمة لحضور مؤتمر أيوفي البنك الإسلامي الثامن عشر للعمل المصرفي والمالي الإسلامي، وكذلك الدعوة لتوقيع مذكرة التفاهم وانضمام البنك المركزي اليمني لعضوية أيوفي، والتي سيقوم بالتوقيع عليها أحد زملائي من أعضاء الوفد الحاضر معكم. ونعتقد أننا تأخرنا كثيرا في الانضمام ووضعنا فرصا كبيرة من الاستفادة من خبرات الهيئة وقدراتها وما تقدمهم برامج حديثة ترتقي بصناعة الصيرفة الإسلامية، وكذلك الاستفادة من مؤتمراتها وأنشطتها السنوية التي تجمع خلاصة التجارب وأفضل القدرات. وفي هذا الصدد أود أن أعبر عن تقديرنا لهيئة المحاسبة والمراجعة للمؤسسات المالية الإسلامية لجهودها المثمرة وسعيها المشكور في تطوير هيكلة ومعايير الصناعة المالية الإسلامية بمهنية عالية وتميز مشهور. السيدة والسادة، مما لا شك في أن الصناعة المالية الإسلامية أصبح لها مكانة كبيرة لدى اقتصادية كثيرة لا سيما في الدول الإسلامية، كما أنها تنمو باضطراد حيث بالتجارب نجاعتها في تعزيز الناتج القومي الإجمالي من حيث مساهمتها في تمويل كثير من مشاريع التنمية الإنتاجية والخدمية. كما ساهمت أيضا في إيجاد آليات ووسائل مرنة لإدارة السياسة النقدية وسد عجز الموازنات بموارد حقيقية وتفعيل الوساطة المالية بتوظيف مدخرات الممولين الذين يحكمون عن التعامل مع الصيرفة التقليدية وجذبها لتمويل مشاريع حيوية، كما أنها أظهرت قدرة على التكيف مع الأزمات المالية والهزات الاقتصادية. إن تبني استراتيجية التنوع المالي والاقتصادي من ضروريات المرحلة، وذلك في مواجهة التحديات الحرجة المتعلقة بالاقتصادات المعتمدة على النفط، فهو يحسن مرونة الاقتصاد ويخلق مزيدا من فرص العمل الجديدة، ويعزز الابتكار والتنمية التكنولوجية، ويدعم الاستدامة البيئية. وما ينبغي الإشارة إليه أن الاستفادة من المالية الإسلامية ودمجها في إطار التنوع المالي والاقتصادي يساهم في تعزيز الاستدامة المالية والعدالة الاقتصادية وتقليل التفاوتات الاجتماعية. السيدات والسادة، تعيش الجمهورية اليمنية أسوأ أزمة إنسانية غير مسبوقة بسبب الحرب التي فجرتها الميليشيات وامتدت لأكثر من 8 سنوات ودمرت كل روافد الحياة، وآخرها ضرب مرافي وناقلات النفط لتوقف التصدير الذي يمثل شريان الحياة اليمنية، لتزيد من معاناة الشعب اليمني، بالإضافة إلى التطورات الإقليمية والدولية غير المواتية وانعكاساتها على المنطقة والعالم، ومنها بالطبع الجمهورية اليمنية. الحاضرون جميعا، يعمل البنك المركزي اليمني باستمرار على تطوير الصكوك والمنتجات الإسلامية السيادية لتصبح واحدة من أهم أدوات السياسة النقدية في اليمن، جنبا إلى جنب مع أدوات السياسة النقدية الأخرى، لتمثل مزيجا متجانسا يساعد في دفع جدة التنمية والنمو الاقتصادي وتوفير الاستدامة المالية وكبح جماح التضخم، ولضمان الامتثال للمعايير والضوابط الشرعية عند تطبيق الصكوك والمنتجات الإسلامية السيادية. أنشأ البنك المركزي اليمني هيئة رقابة شرعية وعين مراقبا شرعيا ممن لديهم الخبرة والكفاءة. كما نعمل على تدريب وتأهيل كادر وحدة الصكوك والمنتجات الإسلامية وتزويده بالمعارف وبالقدرات وتمكينه مواكبة التطورات المستمرة في هذا المجال. وهنا نسجل شكرنا وتقديرنا للبنك الإسلامي للتنمية على ما يقدمه من دعم فني في مجال بناء القدرات من خلال المعهد التابع له. وفي الختام، نعمل المؤسسات المالية والهيئات الإسلامية المتخصصة في تطوير الصناعة المالية الإسلامية، وفي مقدمتها هيئة المحاسبة والمراجعة للمؤسسات المالية الإسلامية، على تكثيف جهودها في تطوير أدوات وصيغ مالية إسلامية تتناسب مع البيئات التي تعاني من الصراعات والهشاشة، لجذب وتوظيف الفوائض لدى المجتمعات التي تحجم عن التعامل مع النظام المصرفي التقليدي. لتوقيع مذكرة التفاهم واتفاقية انضمام البنك المركزي إلى أيوفي، نامل أن تمثل بداية لمرحلة من التعاون وبما يمكننا من الاستفادة من الخبرات المتميزة والتجارب الواسعة للهيئة. أكرر شكري وتقدير الجميع واعتذاري، والسلام عليكم ورحمة الله وبركاته.
Thank you, Your Excellency, Mr. Ahmed bin Ahmed Galib Al-Mai, for enlightening this gathering with those insights and reflections. He'll definitely be missed in this conference today. Now, we have amongst us another highly distinguished personality, a personality who's trained as a lawyer, who holds 2 PhDs. He is His Excellency, Mr. Wasim Mansuri, the Acting Governor, Central Bank of Lebanon, or Bank du Liban, as they say. May I request you to kindly grace this stage with your keynote speech.
Dear Excellencies, allow me first to express my appreciation to the Kingdom of Bahrain, commanders and people for the warmest accueil which they give us upon our arrival and upon our stay in Bahrain. The same for the organizers, Sheikh Ibrahim bin Khalifa Al Khalifa, and Dr. Sami Suwailem, and even if he's not with us, Dr. Rashid Muhammad Al-Ma'raj, Your Excellencies and honorable guests. It is my pleasure to be part of the AAOIFI 18th Annual Islamic Banking and Finance Conference today. The Central Bank of Lebanon appreciates the cooperation with AAOIFI on all aspects, especially at the level of Accounting Board, Education Board, and working groups. Last year, we signed a memorandum of understanding with AAOIFI to confirm our commitment to this cooperation. It is my pleasure today to sign another memorandum of understanding regarding to host an AAOIFI research center in Beirut. And this is a very important step for us for the cooperation also with AAOIFI. The Central Bank of Lebanon had to face many crises through our history, which made Lebanon, whether fortunately or unfortunately, in continuous close encounter with the importance of economic diversification. We stress the need for this diversification to overcome economic and financial crises. In many United Nations publications, economic diversification is defined as the process of shifting an economy away from a single income source toward multiple sources from a growing range of sectors and markets. Traditionally, it has been applied as a strategy to encourage positive economic growth and development. This simple definition highlights the path for growth and development that we all search for. Our way out depends on discovering the potential sectors that can stand against the challenges of inflation, climate change, and supply chain disruption. These three main challenges are the core problems that resulted from recent crises in the last 5 years. It's interesting to notice the potential solutions provided with Islamic finance for these challenges. The United Nations Conference on Trade and Development in 2022 catalogs identifies over 45,000 potential new products with export potential that can help diversify 233 economies. The catalog identifies governments and the private sector as key players in national innovation systems about possible products areas and stress that technology can be used to diversify economies for structural transformations. This gives us an idea about the opportunities we should benefit from before it is too late. And another time, Dr. Suwailem has mentioned that in his speech. The potentials in Islamic finance for economic diversification are many, but it all depends on three main factors that are policymakers' strategic decisions, standards formation to put needed frameworks into actions, and technology implementation to match the transformation. The conference with the session planned is expected to give the needed vision with plans to put diversification and transformation into action. The question is why Islamic finance is the right path for sustainable economic diversification. The answer is clear, and Sheikh Ibrahim bin Khalifa Al-Khalifa mentioned it. Islamic finance is about real economy, and real economy is more sustainable if we compare it with any volatile financial models. As how to make this happen, we call upon the following steps. More research and innovation to develop financial products that provides practical solution for diversification, issuing standards, accounting, Sharia, and governance to catch last opportunities of investment and cooperate with regulators from different jurisdictions to inform these standards, and formulating frameworks and tools that integrate technologies in our effort. The key success factor for all those propositions is more strategic cooperation between AAOIFI, Islamic Development Bank, IFSB, and of course, other regulators and central banks. I wish you all fruitful discussions to make our goal achievable and realize the diversification and growth that we all wish for, and thank you for your good listening.
So that was His Excellency Mr. Wasim Mansuri, and I must thank him for enriching the discussion with his wealth of experience and expertise on the topic. Surely we all have taken note of the points that you have made today. Now, last but certainly not the least, we have amongst us another highly distinguished personality, and it's with great pleasure, immense privilege, and with utmost respect, I would like to invite His Excellency Mr. Lamido Yuguda. He's the Director General of Securities and Exchange Commission of Nigeria, to kindly take the stage for your keynote speech.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم والصلاة والسلام على سيدنا محمد وعلى آله وصحبه ومن تبعهم بإحسان إلى يوم الدين. Your Excellency, Sheikh Ibrahim bin Khalifa Al-Khalifa, Chairman of the AAOIFI Board of Trustees, Your Excellency, Dr. Sami Suwailem, Acting Director General of the Islamic Development Bank Institute, Your Excellencies, Central Bank Governors here present, my fellow participants, I greet you all with the best of greetings. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. I'm deeply honored to be invited here to give a keynote speech at this important conference with the theme Strategies for the Impending Economic Slowdown and a Post-Oil World through Economic Diversification and Leveraging Islamic Finance. Let me start by commending AAOIFI and the Islamic Development Bank Institute for organizing this year's annual conference. The theme of this conference is apt and pertinent as we witness growth and resilience of Islamic finance, particularly in the face of current global economic challenges and the need for economic diversification. The financial markets play a strategic role in every nation, and not only in allocating scarce resources, but also in facilitating the huge investment opportunities available in various sectors of the economy, such as agriculture, infrastructure, oil and gas, and natural resources. The effect of the outbreak of the COVID-19 pandemic and the attendant economic slowdown have forced many nations to look inward and implement strategies aimed at economic recovery. One of the strategies adopted is the diversification of the economy in order to stimulate all-inclusive growth and the emphasis on alternative financing models, such as Sharia-compliant financing. In Nigeria, the federal government has been implementing economic reforms with the major objective of building a globally competitive economy through a new fiscal policy stance. Investment in infrastructure, improvement in the business environment, and access to capital, as well as the promotion of sustainable non-inflationary growth. In its effort to achieve a diversified economy, the Nigerian government is paying significant attention to attracting revenues from the non-oil sector, particularly agricultural commodities and solid mineral resources. The Securities and Exchange Commission Nigeria, as the apex regulatory institution responsible for regulating the Nigerian capital market, is currently implementing a 10-year capital market master plan. The master plan was developed following a careful study of the blueprints and experiences of other markets to serve as a strategic document to guide the development of the Nigerian capital market and the role it should play in the development of the larger economy. One of the key components of the master plan is the development of the non-interest capital market, which is the market for Islamic finance in Nigeria. In terms of building a strong regulatory foundation, encouraging the development of relevant market stakeholders, promoting the development of non-interest capital market products, and creating a regional non-interest capital market hub with the overall objective of positioning the non-interest capital market to serve as a catalyst for supporting Nigeria's economic development. In this regard, the Commission has issued regulatory frameworks governing Sukuk issuance and Islamic funds management. These regulations were developed following the standards set by AAOIFI. As a result of this, the Nigerian capital market has witnessed 13 Sharia-compliant funds, 2 Ijara Sukuk issued by corporates. Also, a total of 6 sovereign local currency Sukuk issuances have been made by the Nigerian government, which were all oversubscribed. In the banking sector, the Central Bank of Nigeria has licensed 4 Sharia-compliant banks and issued guidelines on liquidity status for Sukuk offered by subnationals to align the guidelines with subnational bonds. Similarly, the National Insurance Commission has issued regulations on takaful and has since registered 6 takaful companies in Nigeria. The narrative is the same in the pension industry, as the National Pension Commission has issued guidelines on Sharia-compliant investments of pension assets. As a result, the demand for Sharia-compliant instruments has increased significantly, but supply has not kept pace with this growing appetite from the pension funds. So there is a need for more issuance of Sukuk from both the public and the private sectors. In a related development, Nigeria's Federal Inland Revenue Services, the National Tax Authority, has issued the non-interest finance taxation regulations, which provide a framework for tax treatment of non-interest products and financial institutions offering non-interest financial products and services. These efforts by the federal government of Nigeria and its agencies demonstrate the value Nigeria as a nation places on Islamic finance, as well as our resolve to deploy it as a tool for economic growth and development. We will continue to work with relevant stakeholders in the Islamic finance sector, including the international standard-setting bodies such as AAOIFI, to further promote the development of Sharia-compliant financial markets and deploy innovative instruments within this space to improve the attractiveness of our capital market. Once again, I congratulate AAOIFI and the Islamic Development Bank for organizing this important conference and wish everyone fruitful deliberations. Thank you. Wassalamu alaikum.
Thank you, Your Excellency, Mr. Lamido Yuguda, for those insightful remarks. Your support to AAOIFI in particular is highly appreciated. Let me express my sincerest gratitude and heartfelt appreciation to all the esteemed, distinguished keynote speakers for their presence and for contributing such invaluable and insightful perspectives, which I'm sure has set the tone, the direction, the mood, and the very foundations of the panel discussions to follow. So thank you all for that. We now move on to the Memento distribution ceremony, which is a symbolic yet heartfelt appreciation for the keynote speakers as well as the conference sponsors for their outstanding contribution and support, making this conference possible, ensuring the success of this conference. So for this, may I first request His Excellency Sheikh Ibrahim bin Khalifa Al-Khalifa, Chairman of the Board of Trustees, to please join me on stage. So first of all, may I request Mr. Khalid Hamad. He's the Executive Director, Banking Supervision, the Central Bank of Bahrain, to please join us on stage. Dr. Sami Suwailem is the Acting Director General, Islamic Development Bank Institute, based in the Kingdom of Saudi Arabia. May I request you to please join us on stage as well. His Excellency Dr. Wasim Mansuri, Acting Governor, Central Bank of Lebanon. His Excellency Mr. Lamido Yuguda, Director General, Securities and Exchange Commission of Nigeria. The next person to receive his memento is representing one of the founding father institutions of AAOIFI as well, Kuwait Finance House. May I request Mr. Abdul Hakim Al Khayat, Managing Director and CEO, KFH Bahrain. Mr. Nouri Ali Muhammad Abu Flega, Deputy General Manager, Jamhuriya Bank. I want to call out Saudi National Bank, SNB. Unfortunately, there's no representative to accept the memento today. Okay. Can I request Dr. Osaid Kelani to kindly represent Adib, Abu Dhabi Islamic Bank, and accept memento? Saudi National Bank, okay. Saudi National Bank, what's your name, brother? Okay, it's all right, sir. Dr. Osaid Kelani, Abu Dhabi Islamic Bank. May I request Mr. Yusuf Ibrahim, CFO, Al Salam Bank. Please join us on stage. From Bahrain Islamic Bank, we have Mr. Amir Dairi. He's also the CFO. May I request you to please join us on stage as well. Bahrain Islamic Bank. Amir Dairi. No, somebody changed. Somebody asked me to change. Okay. Mr. Suhail Tohami, Senior Vice President, Treasury, Financial Institutions and Investments from Al Baraka Group. Mr. Sattam Suleiman Al-Gusebi, Chief Executive Officer from Khaliji Bank. Mr. Hussein Al-Khaja, GCC Regional Director, DDCAP. I'm definitely going to butcher his surname, so please forgive me for that. Christopher McGuan or McGuagan, okay, from Iger. From Fitch Ratings, we have Abdul Razak Al Rashaidain, Associate Director. He's the Associate Director at Fitch Ratings. Amir Basat, Director, Global Professional Services and Support from Azentio. His Excellency, Mr. Ahmed bin Ahmed Galib Al-Maqbi is not here with us, but he has sent a token of appreciation for His Excellency Sheikh Ibrahim bin Khalifa Al-Khalifa, all the way from Yemen. Yes. He has also sent a token of appreciation for Mr. Khalid Hamad, Central Bank of Bahrain. May I request you to please join us on the stage. So before we part ways and conclude the opening ceremony, let me just take 10 minutes of your time. We are going to have some agreements and MOU signing ceremony. In fact, we have 9 agreements and MOUs to be signed today. The first agreement is between AAOIFI and Islamic Development Bank. This is just an announcement of the agreement to be signed later on. But the announcement is so good that I had to share it with you. Islamic Development Bank has approved the technical assistance grant to AAOIFI, by virtue of which AAOIFI is going to undertake a series of industry benefit projects, such as the development of country assessment reports, research-based technical reports, footprint reports, and the development of capacity building programs for different regulatory and supervisory authorities within the next 3 years or so. So the first agreement that we are actually going to sign today is between AAOIFI and the Central Bank of the Turkish Republic of Northern Cyprus, for which may I request Her Excellency Dr. Pelin Yeleli. She is the Deputy Governor. May I request you to please join us on stage for the formal signing of the agreement. This agreement, by the way, is all about market development, capacity building programs, and joint events. The next agreement we are going to sign is between AAOIFI and Central Bank of Lebanon. For this, may I request Dr. Wasim Mansuri, Acting Governor, Central Bank of Lebanon, to please join us on stage. AAOIFI has started this JRDC project, which is Joint Research Development Center, in which we are basically going to collaborate, coordinate, cooperate with different regulatory and supervisory authorities for the development of standards and for other and in other areas such as capacity building, joint events, and so on and so forth. We are also going to sign the same JRDC agreement with the Securities and Exchange Commission of Pakistan, for which may I request Mr. Mushtaba Ahmed Lodi to please join us on stage. Just 6 more agreements to go. Inshallah, we'll be done within the next 2 hours or so. Okay. Yes. 1, 2, 3, 4, 5, 6. Okay, AAOIFI is also going to sign an agreement with the Central Bank of Yemen, for which may I request Hussein Ali Muhammad. He's a general manager at the Central Bank of Yemen. Okay, the next agreement is between AAOIFI and Indonesian Institute of Certified Public Accountants. Actually, it's Indonesian Institute of Certified Public Accountants, and may I request Mr. Tubagas Mansur, he's the chairman of the Sharia Practitioners Committee, to please join us on stage. Indonesia.
There's 2.
don't know.
Okay, may I request Dr. Wasim Abdul Hadi Hassan. He's from Institute of Banking Studies, Central Bank of Iraq. And this agreement is going to be signed between AAOIFI and Central Bank of Iraq. May I request you to please join us on stage? Dr. Wasim. No. Pressure. Dr. Muhammad Yandiev, he's from the Russian Association of Experts in Islamic Finance. Kindly join us on stage as well. AAOIFI is going to work with this institute for the joint events in Russia and the CIS region. No, bring it. Put it there. Okay. No, two more. The next agreement is going to be signed between two parties other than AAOIFI. It's going to be between BIBF and Islamic Development Bank. So may I request, actually we need 4 chairs, brother. One more chair. May I request Dr. Ahmed Sheikh, he is the Chief Executive Officer, Bahrain Institute of Banking and Finance, to please join us on stage. And from ISDBI, may I request Dr. Sami Suwailem, Acting Director General, to please join us on stage as well. So the Islamic Development Bank and the Bahrain Institute of Banking and Finance, they actually have a strategic partnership now by virtue of this agreement. And the agreement says that they're going to enhance the ongoing collaboration in the areas of capacity building, research, and development in Islamic Development Bank member countries. So BIBF is going to provide these services to Islamic Development Bank member countries. ये गलती हो गई, ये AOFI के साथ था, इसलिए तो कंफ्यूज हो गया.
Climate financing and Islamic finance, the theme.
थीम क्या मतलब, कॉन्टेक्स्ट क्या है?
थीम है ये थीम है रिपोर्ट की. नहीं
Okay, the last agreement that we are going to sign, I know you have been very patient, is going to be between AAOIFI and BIBF.
Your Excellencies, thank you very much for bearing with us. It has been a wonderful morning, I'm sure, with regards to the keynote speeches that you've heard. We thank everyone for their active collaboration and the initiatives that we have put together, inshallah, or we signed today with a number of regulatory and supervisory organizations from around the world, with AAOIFI, with Bahrain Institute of Banking and Finance. We thank Dr. Ahmed Sheikh for joining us on the stage as well. We are now going to launch the Global Islamic Finance Report 2023, which is being published on an annual basis since 2010 by Adbith Consulting and Cambridge IFA from the UK. It's an annual report that puts together the growth and development of Islamic banking and finance industry together for the last 12 odd years, with an annual theme to it every year. This year's theme has been climate financing and Islamic finance. To formally launch the report, may I invite the founder and editor-in-chief, Professor Dr. Humayun Dar, to please join us on the stage and present the annual report to His Excellency Sheikh Ibrahim bin Khalifa Al Khalifa, the chairman of AAOIFI Board of Trustees, and Dr. Ahmed Al Sheikh, the CEO of BIBF. Ladies and gentlemen, I want to thank you again for bearing with us, for being very, very patient for this opening session for the annual AAOIFI Islamic Banking and Finance Conference, together put by AAOIFI in collaboration with Islamic Development Bank under the patronage of Central Bank of Bahrain. We now close the opening session. We would like to thank Your Excellencies, distinguished guests for joining us. We will have a coffee break now and a networking in the networking area, and inshallah we will reconvene at 11 o'clock, inshallah. So we would start the first session sharp at 11 o'clock. Thank you very much.
Ladies and gentlemen, before you go for the coffee break, just one small announcement. AAOIFI is having its capacity building week, which is in line with the conference. It's a full week of capacity creation. So all the people who are attending the conference, they are allowed a flat 70% discount on all the workshops that they register. So make please full hay of this knowledge sharing that's available to you for the whole week. Thank you.
नहीं
Group operates in the global wholesale financial markets, providing intermediary services globally to financial institutions that adhere to Islamic and other responsible codes of financial practice. Ethos AFP was innovated to support the interbank and capital markets trade requirements of Sharia-compliant financial institutions. In 2021, DDCAP announced Ethos Terminal, the latest evolution of Ethos AFP, a multiple award-winning automated trade and post-trade services platform. Ethos Terminal brings additional integration functionality to DDCAP clients via an open market environment. This enables users full discretion in choosing trade counterparts and has been developed in response to user demand and Sharia preferences.
ورقة اللي هو هيك على سمير هيك شايف هيك يلا بسرعة سمير
Fully integrated
هيك
solutions to provide our clients with a dynamic platform for their treasury and capital markets activity that also aligns with their Sharia, sustainability and corporate responsibility requirements. DDCAP aspires to connect the global Islamic financial market responsibly, and the development of Ethos AFP and its functionality is integrated within DDCAP's corporate policy formation, including our Sustainable and Responsible Actions Program and the review and validation processes and procedures of our esteemed Sharia Supervisory Board.
يلا تفضل. Thank you.
خلص
For those who are sitting at the back, can we please request you to come forward? Take the seats in the front, please. We will be starting in about a couple of minutes, please. Can I also request people at the back, please come forward? And the hotel staff, can you please help in closing the doors? Bro. Banquet staff, hotel staff, Rajesh. Assalamu alaikum wa rahmatullahi wa barakatuh. Can I request everyone to please take your seats? The session is about to begin. Assalamu alaikum wa rahmatullahi wa barakatuh. A very good day to all of you. I'm sure you've enjoyed the opening session. I, on behalf of AAOIFI, Islamic Development Bank and Central Bank of Bahrain, let me welcome you again to the Kingdom of Bahrain, as well as to the 18th AAOIFI-IsDB Islamic Banking and Finance Conference. It's a great opportunity to come together to have meaningful conversation on different aspects of Islamic banking and finance. And I'm sure that you will agree that the theme of the conference wouldn't have been as timely as it is. It's a very, very important discussion that we will have, inshallah, during the course of the next 2 days. And I hope that all of us benefit from the opportunity in terms of our knowledge, enhancement, our networking capabilities, our exposure. And once we go back to our respective organizations, our respective institutions, we go back more informed and not just by telling our colleagues that it was just another conference. I must say that AAOIFI conference is the flagship conference in the global Islamic banking and finance industry, and we see and witness the success of it with us today once again. So we welcome you once again, and without any further ado, after the opening session, where we heard a lot of stimulating and thought-provoking ideas, I'm sure that the rest of the panel discussions will further add on to the discussions and the points that were shared in the morning. So without any further ado, we would like to move on to our session 1, which is a very, very important session on diversifying the economic activity in the Muslim economies, role of Islamic finance. It's very, very important and very, very timely for us to discuss what the role of Islamic finance is when it comes to the economy in general, be it Muslim majority countries or Muslim minority country. To deliberate on this panel discussion, we are very, very pleased to have Dr. Sami Suwailem, Acting Director General of Islamic Development Bank Institute, who is the chairman of the session. Please, if you can please join me with the warm welcome to Dr. Sami Suwailem to please join me on the stage. We're glad to have 4 panelists with us, and I'll call them one by one. I would request them to please join me on the stage. May I have the honor of welcoming Mr. Mushtaba Ahmed Lodi, Commissioner, Islamic Finance and Securities and Exchange Commission of Pakistan, the Islamic capital markets regulator in the country. Please join me on the stage. Can also request Mr. Ayad Asli, General Manager of Islamic International Arab Bank from Jordan, to please join me on the stage. Mr. Rustam Wakhitov, Academy of BEPS and Russian Association of Experts in Islamic Finance, a very, very renowned person and a lawyer by practice. And my dear brother Mustafa Adil, Head of Islamic Finance at London Stock Exchange Group, or Refinitiv. I welcome you all and thank you very much for spending your time to join us today. And I pass on the mic to Dr. Sami Suwailem to please lead on the discussions. While we are setting up, can I please request my brothers and sisters who are sitting at the back, please let's come forward. I'm sure pictures look better when the seats are full in the front. And we don't want somebody to call you backbenchers. Over to you, Dr. Sami.
بسم الله الرحمن الرحيم الحمد لله والصلاة والسلام على رسول الله وعلى آله وصحبه. Welcome again We are honored to have a group of experts and professionals, both from the public and the private sector, to discuss the main theme of the. Although the pending economic slowdown is too pessimistic to say, but let's focus on diversification. That would be a little more optimistic. So I would ask all esteemed panelists to give us their views, their recommendations on how to achieve diversification in a manner that would be productive and helpful to the economy. But this would be within 7 minutes, because otherwise I think Brother Ridwan, he will charge me. And if he charges me, I will have to charge. So let me start with Mr. Mujtaba Ahmed Ludhi, Commissioner at the Securities and Exchange Commission of Pakistan. And the commissioner is not the person who collects commissions. He is a vice president, equivalent to deputy governor. Brother Mujtaba, over to you.
Thank you so much for your introduction. May I ask request to put on the slide which we have provided. Slides, please. Yes.
Voice is not clear.
No. Can you hear me now? Yeah. Okay. Bismillahirrahmanirrahim. Assalamu alaikum and good morning to you all. Honorable person of session, panelists, it's me immense pleasure to be here and have this opportunity to share our views on the topic. Next slide, please. Can you hear me now?
Check.
Yes, can you hear me now? Can you please put slide 2? Next slide. SCCP, including its processors, has been regulating the security market since 1969. Mudarba, a unique institutional arrangement, has been regulated since 1980.
Can you bring it closer, please?
Apart from functioning as a financial regulator, we have also been providing corporate registry services since 1984. The insurance sector was added to our regulatory domain in 2002. Specialized companies and institutions, including private pension funds, mutual funds, leasing companies, microfinance companies, and other NBFCs have been added to our regulatory domain since 2002. And the last addition was regulation of corporate restructuring and rehabilitation of companies in 2015. Next, please. You can see SCCP has diverse regulatory mandate with a level of maturity among regulated industries. We administer a number of primary and secondary legislations, but we do not have a dedicated Islamic finance primary law, with the exception of Mudarba Ordinance 1980. In light of our constitutional requirements, re-emphasized by a recent judgment of Pakistan's Federal Sharia Court on the elimination of Raba, we are working to transform our entire regulatory universe in line with Sharia principles and rules. For this, in collaboration with other stakeholders, we have established a comprehensive governance arrangement, including Sharia Advisory Committee and Apex Committee to oversee the implementation of FSC judgments, and Functional Committee to address practical challenges being faced by the industry. Next, please. Here is a snapshot of Islamic finance industry within the regulatory mandate of SCCP. Market capitalization. The stock exchange market cap is about 6.3 trillion Pakistani rupees, is around 23% of total banking assets, 65% of market cap in Sharia compliant securities as of June 30th, 2023. Approximately 45% of mutual fund AUM and 65% of pension fund AUMs as of June 30, 2023. The Kafil insurance premium market share is about 11% of total size of insurance market as of December 31st, 2022. Mudarbas. We have 28 listed Mudarbas with equity of 22.42 billion and total assets of 52.32 billion Pakistani rupees as of June 30th, 2023. We've got about 139 registered Sharia advisors with SCCP, including private limited companies until June 30th of 2023. From 2018-19 onward, we have certified around 69 certificates of Sharia compliant securities to multiple issuers, Islamic commercial papers and Sukuk, worth 563 billion until June 30th of 2023. Next, please. Coming to the topic today's discussion, I'm of the view that economic diversification is inevitable for Muslim world. According to the Economic Diversification Index, EDI data, no Muslim country ranks among the top 30. Turkey, which is the most diverse economy among the Muslim countries, holds a rank of 32, followed by Malaysia, which holds the 38th position. Pakistan is ranked the 65th position. Some important Muslim countries, including Saudi Arabia, Qatar, and Iran, have exited the bottom of 10th of EDI list in the last 2 decades. We know that economic diversification through greater private sector engagement can contribute to sustainable and stable macroeconomic development, economic resilience, risk reduction, job creation, and more sustainable public finances. It also enhances skill diversity in the labor force, income distribution, resource management, and global competitiveness. Economic diversification can also spur technological innovation and advancement. Next, please. Here I would like to emphasize that there is great need of economic diversification in Muslim world at various levels. Through this, sustainable economic development can be achieved. This means a larger share of private sector, job creation, sustainable public finances, economic resilience and stability, skill diversity in the labor force. Next, please. Opportunities for economic diversification. Economic diversification offers many opportunities. We can focus on sectorial economic diversification to explore new sectors of economic activity. For example, tourism, IT, product diversification to introduce new products within the same sector to fulfill market demand. Public finance diversifications are to identify new avenues for government recipients. Currently, government recipients rely on few sectors in Muslim countries. Next, please. Islamic finance play a vital role in the diversification of economies of Muslim world. Sharia conscious investors remain at bay for conventional finance due to religious considerations. However, Islamic finance is equally appealing to both Sharia conscious and non-Sharia conscious investors. Hence, Islamic finance can increase financial inclusion. This has also been validated by introduction of Islamic banking in many jurisdictions. Most Muslim countries need huge investment to diversify their economies. The instruments and the products of Islamic finance can be used to mobilize resources to finance infrastructure development projects in Muslim countries. Governments in Muslim countries can run deficit budgets, which is the need for financing current and development projects. Islamic finance instruments can be used as an alternate source for financing the governments. The products of Islamic finance such as Mudarba, Musharka can be of great use in developing micro, small, medium enterprise sectors, which in turn can be helpful in diversifying the economy. Islamic private equity and venture capital can spur innovation and entrepreneurship through financing and risk sharing. Unlike conventional finance, Islamic finance is based on risk sharing, which enhances the likelihood of startups as the financiers play an active role in the operations. Some silent features of Islamic finance, including risk sharing and backing by real economic activity, make it inherently stable. This can contribute to overall economic stability and resilience of the economy. Next, please. That's all. Thank you very much. And I can pass it over to you.
Thank you very much, Brother Mujtaba. So what did the Security Exchange Commission in Pakistan do recently to enhance diversification from an Islamic finance point of view? Are you promoting, specific sectors? How would you summarize? I mean, very good overview of the importance of diversification and how our member countries do not, unfortunately, rank very high on the diversification index. So what things that you think the Securities Exchange Commission could propose or you could propose to the Commission?
Yes, I agree that the regulators have a major role to play in economic diversification of a country. To achieve economic diversification in Muslim world through Islamic finance, I think several regulatory initiatives need to be implemented, such as enabling a regulatory framework ensures clarity, standardization, regulatory ease, incentivization of diversification to lure existing business into new ventures, promote innovation through simplified regulatory requirements.
How do you promote innovation in the Securities Exchange Commission?
Well, we are working.
You have sandboxes?
We have sandboxes, yes. We've done the fourth cohort.
How many members or how many applicants you get?
It varies. We are running the fourth cohort this year. And then now what we've done is we have opened, there's no time limit. Anybody can enter any time now from this year. And this is the fourth successful one.
How many years the members
cycle,
of the
1 year.
sandbox?
1 year is the cycle, cohort cycle.
Okay.
Yes. We are also working on capacity building, education to provide skilled human resources in various sectors to implement diversification initiatives. We are supporting research, development to spur innovation, diversification through collaboration with market players, research centers and industry associations. We are working cross-border regulatory coordination to enhance consistency, standardizations, and
you have regulations for risk sharing, Sukuk?
We are working on it. Sukuk is on Islamic finance. We are working to float common debt security on PSX, Pakistan Stock Exchange. We are working on that. We are working to put on 3 months and 6 months Sukuk as well. So that's an ongoing process. We are working to enhance that.
Very good. Thank you very much. I would like to ask Brother Iyad Asali. He is the General Manager of the Islamic International Arab Bank in Jordan. Brother Iyad, how do you see, how would you contribute? How would the bank would contribute to diversification?
I have a presentation that shed a light on our contribution. So I put our bank as a case study for diversification of economies in terms of products and services that we have launched that could explain how certain challenges relating to diversification has been tackled. So if you wouldn't mind, I would like to share with you my presentation. Sure. Hopefully it will shed insights and answer your questions. If we can start with the first slide, please. Just some summary about Jordan. Jordan GDP, approximately 46 billion US dollars. The economic identification diversification index was 100.3. Jordan has relatively more diversified export basket and diverse set of trade partners. It's EDI report 2022. Regarding the Islamic International Arab Bank, was established in 1997.
Jordan is next to Australia in the diversification index.
I don't know, this is from the report.
Okay.
I have no idea.
That's good news.
I'm not able to comment, but I have no idea about that. Australia and Jordan are similar. I have no idea.
Australia in 2021, the score is 103, while Jordan 101.6. So you are just next to Australia.
So even it's higher than the figure here, a little bit.
Probably, maybe that was 2020 probably or something.
Yeah. Anyway, just this very small summary about our bank. It was established in 1997, member of the Arab Bank Group, total assets of $4 billion plus, main businesses lines, retail, SME, corporate, and FIs and treasury and business philosophy. We have something we keep on really repeating, which is part and parcel of Islamic banking ideology, in my view. IIAB products and services are adapted to active CSR concept, targeting to achieve positive impact on society, economy, and environment. Because as opposed to normal CSR, which is giving, like zakah, like qard, whatever, you have the active CSR in terms of products and services which are socially responsible. Here, please allow me to go to the second slide. Just a summary of when we talk about economic diversification, challenges of an economy poses various challenges that can impact the success and sustainability of the process. Major challenges that face economic diversification in general are resource dependency, risk aversion and fear of failure, lack of infrastructure, market information and research gaps, limited access to capital, vulnerability to external shocks, skill mismatch and human capital challenges, environmental and social considerations, global competition, and market access, technological disruptions, policy and regulatory barriers. Now, when we come to the economic diversification challenges and our case here in the bank, we addressed main challenges that face economic diversification in Jordan and initiated solutions to overcome these challenges based on principles of Sharia and the roles of Islamic finance in the economy. I want to shed the light on 4 of the main challenges, which is firstly, lack of infrastructure. Inadequate infrastructure can hinder the development of new industries without proper infrastructure. That cost of doing business may be high and the movement of resources between sectors can be constrained. Limited access to finance. Financing institutions may be hesitant to lend to ventures in unfamiliar or low or high-risk sectors, limiting the ability of businesses to expand into new areas. Environmental and social considerations. Some diversification efforts may face challenges related to environmental sustainability and social considerations. Technological disruptions. Adapting to technological challenges requires significant investment in research and development, and some economies may struggle to keep pace. I want to tackle each of those challenges separately. Regarding limited to access to finance, IIB considered one of the most active banks in Jordan in terms of financial inclusion, as the bank adopted inclusive approach to ease the access to finance for individuals, women, youth, and SMEs. I want to put for discussion our case study. Until 2012, Islamic banks in Jordan were considered less active in MSME banking compared to conventional banks due to the absence of Islamic finance guarantee scheme and the Sharia compliant and mobilization subsidies agreement, which limited Islamic banks' capabilities to expand in financing of MSMEs. Our role as a bank, we launched a plan to initiate an integrated framework for MSME financing by setting main pillars of establishing cooperation, partnership, and supportive entities to provide Sharia compliant solutions to MSME financing challenges. Here, we have created something we call the triangle of success of MSME financing. Unless there is affordable financing with no focus on collateral, financial considerations, consultation, and technical support and capacity building, there will be no success in MSMEs. So, how to mobilize funds? Sharia compliant agreement with the Central Bank of Jordan and international organizations such as the Arab Fund for Social and Economic Development and the World Bank to to acquire low-cost funds to MSME subsidized financing through the Central Bank of Jordan. This is one. So we are able to mobilize those resources. Financial guarantee scheme, we signed an agreement with the loan guarantee company in Jordan, which is called Jordan Loan Guarantee Company, to create a product we called Kafala, which is Sharia compliant product to guarantee up to 70%, it could reach up to 85% of the MSE's financing without need to put collateral forward. So this eased the burden of requiring collateral for MSMEs. And this has been mimicked and copied by the other Islamic banks 3 or 4 years after we initiated this initiative. Well-qualified team, we have created well-trained MSME staff with the required skills and capabilities to provide members roles of consultations for MSC clients. We have created something we called business centers in our branches to give this technical support, help them create their financials, help them prepare books that are bankable, and so on and so forth. Cooperation with specialized entities, memorandums of understanding signed by local global organizations to provide technical support and capacity building. Here, allow me to thank the Central Bank of Jordan because it really helped us a lot to make this venture a success. And now it has been all over all the Islamic banks in Jordan are adopting those, and the Central Bank is mobilizing more of the resources. Our contribution has been extremely high. Until we were zero, now we are the highest ranking user of the loan guarantee schemes and the funds mobilized by the Central Bank of Jordan through.
Are there large default rate on these guarantees?
Very low defaults, firstly. Although there is guarantee, even our policy, not because it's guaranteed, you have to sustain bad credits. Our default, you can check with the loan guarantee company, we are the lowest default in all the conventional and Islamic bank, because as our colleagues have said before, Islamic banking is after real economy. The possibility of you getting the funds and diverting it to something else other than the venture you're trying to finance is non-existent. Especially if you avoid some products which maybe are controversial, like tawarruq and all this, the possibility of having, not being, tailor-made products to target the perspective or the activity you're financing is non-existent. And that makes the default less. The impact was more MSCs accessible to Islamic finance. MSCs are able to create more jobs and expand. In fact, the World Bank audited us and came with the Central Bank of Jordan to see where the funds went. They discovered that every million JDs in financing created 30 jobs. And this was extremely very
This
high.
is the analysis of the Central Bank?
World Bank.
Of the World Bank.
Because they came with a team with the Central Bank to audit, because it was not 2012. So now we are given the highest level whenever there is month.
Every 1 million JD created how many?
30 jobs.
3 or 30?
30 jobs. Yani, what we have taken initially from the Central Bank was 3 million JDs, it's created 90 jobs. And this was audited and it proved success. So in a country like Jordan, which has a high level of employment, this is by all means a contribution. And probably it should set the pillar for future consideration.
How much the job would pay?
You know, in Jordan,
on average?
On average, around $700, between 500 and 700
per month.
Not more, I mean.
So per year, this is about, let's say, $80,000 per year.
Yeah.
Times 10. This
$8,000 per year. 8,000.
Yes,
$8,000.
$8,000. And then times 10, 80,000, 3. So you are talking about $250,000.
For Jordan, it's not bad to start. It's not bad because usually this is, some of them are skilled workers, non-skilled workers, and usually new businesses. You know, in Jordan, 97% of the organization are SMEs. And they are, if you want to move the economy, cannot move without SMEs. It's a fact. Initially, SMEs was good to have. Now it's necessary to have. Focus on SMEs. You cannot grow without focusing on SMEs. Maybe you can have case studies of other countries. You know, expanded reach and outcomes, establishing collaborative partnership results in success. Let's move to the other infrastructure. We have a case study which we have created. We have a very huge I was talking about SMEs, now I'm talking about conglomerate, large corporates, non-Sharia compliant products to finance infrastructure projects, which is a huge effort. You know, there is an example of GIG, which is Al-Amlaq company, which is one of our biggest chemical manufacturers in Jordan, and they planned the facility. We financed them with a total Islamic finance from A to Z, including renewable energy, including istisna, including عقد توريد, and including murabaha, including ijara, all to finance, and it set up the best and most advanced factory for chemicals and detergents in Jordan. This was a success story that proves that Islamic banking can finance the infrastructure project if there is a will to look at it and see how you can use it away from trying to make it easy to use murabaha, simply product which everybody follows without going into more risk and
So how much is the infrastructure of your portfolio?
Now I think for manufacturing it constitutes around 20, maybe 15%. 15%. We are by and large, let me just focus, we are a retail bank in general. So our focus on infrastructure projects are selective and on big projects after we study the feasibility and make sure, because there is risk sharing here. And this, we apply to risk sharing by and large. Because if you want to only be a normal bank, you cannot do Islamic banking. If you want to do Islamic bank, you have to have the risk sharing as part and parcel of your DNA. If you don't want it, I think you have to quit Islamic banking. Just go and do conventional banking. Sorry, I have to say that, because unless, let me just, this is the infrastructure. Of course, I want just to skip because my presentation probably is, let me talk about social considerations. Now we're going to another avenue. The active CSR strategy is set social, affordable, and attainable products are designed to financially include low-income individuals to support their needs and active. We have, besides Qard Hasan, more affordable, attainable finance needed to low-income individuals to reduce burdens and to meet their social obligations. Many women can't clearly address these financial needs because of improper financial awareness. So what we have done, new products for active CSR products that's based on creative application for Qard Hasan, such as installments of same concept cash price based on Juala contract, EPP Juala card, and revolving credit card. These products have the common features of affordability, attainability, and specialty. IAB launched also Tamakkani, Empower Yourself, as a set of financial products targeting women for their personal and business needs, including reducing pricing, special finance guarantee schemes for businesses owned by women, and cooperating with women, supporting the empowerment of entities.
Is this real Qard Hasan, or
all of them
Hasanain is hiding?
Believe it or not, all those products are Qard Hasan. Like the Juala. Zero. Listen, Juala is what? It is against, we get compensation from the trader, but the poor person who is our borrower doesn't pay anything. If I want to buy a refrigerator for 1,000 dinars, I'll end up paying 1,000 dinars for sure. But the compensation I get is from the trader, because he's getting cash immediately and the risk is on me. He will be willing to give away 5% or something. We call it Juala, which is like تأصيل الشرعي. I cannot say here with the presence of all the Sharia scholars that you are like an agent. So you get an agency fee in a way, which is not interest. It is Sharia compliant thing that you get because you have made this sale possible. The same thing applies to Qard Hasan because it's proper Qard Hasan. And Qard Hasan card is nothing but a card which is evergreen overdraft against zero interest. All what the client has to pay is an annual fee which is equivalent to a normal card fee. And the Sharia, our Sharia committee said, if there is a difference between the fee for the normal card and this one, it's not Sharia committee. It's the same exact fee. The same fee for a normal card is the same.
And customers are happy.
Of course.
How about the shareholders?
Shareholders, of course, they're happy because they're getting more money, because what you're doing is you're getting the client loyalty. Maybe it doesn't
increasing your market share.
Exactly. So this is
1 minute.
The last thing is about diversification, technological disruption. You know, after COVID-19, without digitization, you can't do banking. So what we have embarked in very ambitious policy of digitalization to service the new digital ecosystem needs tailor-made solutions to beyond technical banking, such as online banking, BaaS, and other concepts. Our role was, we launched the digital transformation strategy to fast and pace of the bank's digitalization strategy, considered the ecosystem. It helped us a lot during the pandemic, and now it's helping us afterwards. The bank adopted Sharia compliant solutions to finance fintech needs to any stage. The impact was many IAB customers showed speed, culture shifting towards digital banking. The IAB digital ecosystem new cooperative relationship with many entities launched, provided seamless services. Many of the fintechs accessed by IAB Sharia compliant financial solutions. Islamic, the lesson learned, and this is the last thing I want to say, Islamic finance can play a crucial role in navigating and leveraging technological disruptions by elevating Sharia compliant solutions and aligning and providing cooperative framework to service customers through new banking concepts. Thank you very much.
Thank you, Brother Iyad. Very interesting overview of the activities of the Islamic International Arab Bank in Jordan. Next of our esteemed panelists, Mr. Rostom Bakhitov, and he's Associate International Tax Partner in Kazakhstan. But I think you will not collect tax from us. Are you going to collect tax from us today?
Nobody knows.
Okay. So how would tax system would encourage diversification? Over to you. 7 minutes.
On this subject. Well, thank you very much, first of all, for allowing to address these ideas to such a high audience. And wassalamu alaikum, ladies and gentlemen. I'm very much honored to be here, and I'm grateful to AAOIFI to keep going this discussion and encouraging new actions, new ideas to be implemented to facilitate Islamic finance. My professional focus is on international tax structuring with particular impact on Islamic finance transactions and structures. And you see the QR code on the slides. So if you have any questions or comments, we're very much restricted in terms of time, but I will be happy to answer if you just contact me via WhatsApp. I will start. Next slide, please. I will start with maybe basic things, but we should be aware of them. So before we speak about Islamic finance tax regulation, we need to be aware of certain peculiarities of a business which needs to be taken into account for tax purposes. Tax policies can be used to encourage the growth of Islamic finance, and among them, eliminating double taxation, for example, step duties or unequal taxation on value-added tax of Islamic finance transactions to create just level playing field. Let's take a simple example. When a person buys a car through taking out a conventional banking loan, the interest payment on this loan would be exempt from VAT in most of the cases. However, when an Islamic bank in conventional tax system buys car for the customer and gets the payment by installments, these installments will be taxed by VAT in absence of special exemption for this. Effectively, this tops up the premium which customer pays to bank by the VAT rate. So in example, when VAT rate is 20% and let's say interest rate is 10%, the premium which customer will pay to Islamic bank will be equivalent of 12%. So basically, this system maybe not on purpose, but effectively it puts the Islamic banks in disadvantageous position, forcing them to sell their services at 20% higher rate, which is significant difference. In many countries, this is specifically addressed and eliminated, but we need to be aware of this when we structure tax treatment of Islamic finance transactions. Among other measures to facilitate Islamic finance transactions, there could be targeted tax incentives. Please, next slide. And these targeted tax incentives, some may argue that this is kind of unfair treatment in favor of Islamic finance, but Islamic finance is also beneficial for economic activities, for social well-being, and as Honorable Dr. Suwailem mentioned in keynote speech, it is very socially positive impact. So we do not object against tax exemptions for ESG, for example, environmental sustainability. Why should we object against Islamic finance, which also has very positive impact? In the historical evidence, for example, from Dutch history, when the old-fashioned tax system, medieval type, lots of various taxes, very complicated, was abolished, and new, very simple, straightforward taxation system was introduced. It helped a lot to bring the Dutch, which is a small country, as a maritime superpower of the time, so 17th century is the golden age of the Netherlands. Other tax incentive can include reduction of administrative burden. When small entity is taxed not with, let's say, 10 of different taxes, but one single tax focused on revenues, it will also help to reduce effort of the entity for administrative compliance, and there are many successful cases when simplification of tax system for small businesses had very positive impact on performance of such businesses. Next slide, please. Besides tax and administrative measures, this is not the only instrument which can help development of the industry. Streamlined regimes, streamlined procedures can help a lot to grow the business and the industry. And not only tax supportive measures, not only administrative supportive measures. As a resident of the Netherlands, I receive a lot of invitations to seminars, to workshops run by government agencies, how to do business in other country, how to go to other country. They offer even subsidies to go for various trade missions, and this also helps a lot because Dutch businesses are pretty well known for being international, and there is a support of the government for this. There is a concentrated effort in the Netherlands to equip business owners with the knowledge and tools to thrive independently. And this embodies the old saying, give a man a fish and you feed him for a day, and teach him how to fish and you feed him for life. Similar hands-on support to build capacities would significantly benefit Islamic finance as well. And whether through disseminating best practices, publishing marketing updates, or running how-to training sessions, targeted assistance will help executives to establish and scale up their ventures. With today's information technology, distributing of knowledge is very easy, easier than ever. We could take this presentation and put it as an article on LinkedIn, edited like 10 minutes after it finished. It's technically possible. We have done this. Presentations materials can be uploaded and stored in particular databases and help to teach other people how to run successfully Islamic finance businesses, share best practices, and if it is continuously updated, it will provide very valuable source of information for new businesses. Next slide, please. And as a center of excellence, AAOIFI is very well positioned to facilitate dissemination of such knowledge and establish repositories of this information as intellectual capital and contribution using its extensive network. Having more touch points globally would significantly enhance access to information and capacities in Islamic finance. And AAOIFI can be a continuing central point for knowledge dissemination and catalyzing the industry growth by supporting these initiatives. Next slide. I took the liberty to take few Islamic fintech projects and put them into one single database. May I ask you to demonstrate how it works? This is live presentation. So basically what you will see on the screen is happening in real life time. And could you press please the conversation starter, how the database can help. Meanwhile, I'll just tell how it appeared.
This database in Kazakhstan only? This database all over, worldwide?
And it is accessible, so basically everyone with GPT subscription can enter this link and use this database. It's small, there are only 8 startups presented in this database, but if you can share with me information on success stories of Islamic finance, I will be happy to upload it as well and put it into this database. So how it works, I asked one of the students to prepare the presentation on recent Islamic finance startups, and we just placed to GPT-driven artificial intelligence database. Very easy to arrange, doesn't require lots of technical knowledge, and I will be happy to explain how I done this. And if there will be similar database or several databases which will collect information on best practices, it may create very fruitful, let's say, ecosystem of knowledge, experts, resources perhaps, and information. So if AAOIFI and other players will support this initiative, we can just help to develop Islamic finance business by way of knowledge dissemination, which is very easy to do nowadays during the technology instruments we have.
DEPS. A private company, DEPS, in Kazakhstan.
So this is the Dutch business focused on trainings, and mainly we're focusing on international taxation, but I will be happy to extend it also to other niches like how to run Islamic finance businesses, and I will be grateful for your contributions to this
knowledge. In Europe
knowledge.
or in Kazakhstan?
Everywhere.
Everywhere.
In Europe and in Kazakhstan and the rest of the world as well.
You will give us tax credit?
I will give you advice.
You will give AAOIFI tax credit.
We'll give you advice how not to get in trouble with taxes. That's my promise.
Thank you very much.
Thank you. Thank you.
Okay. Brother Mustafa Adil, Head of Islamic Finance, London Stock Exchange Group. Brother Mustafa, before you start, can you explain to us what does London Stock Exchange has to do with Islamic finance? Your microphone is working or not?
I hope it's working.
Okay.
Can you hear me?
First, answer this question and then get into diversification.
Doctor, I get asked this question a lot by a lot of people. Actually, London Stock Exchange actually is one of the largest exchanges.
Bring it closer, please.
Let me make it higher. Is that better? I hope that's better. Otherwise, I'll revert to the handheld. Yeah, let me do it like this.
Much better.
Ease in. So the London Stock Exchange Group is actually one of the largest exchanges in the world in terms of listing Sharia compliant instruments, so sukuk and so on. Most of the major sukuk that is issued by sovereign entities, by some of the leading financial institutions, Islamic Development Bank and others, is listed on our exchange. We also own FTSE Russell, which is one of the largest index providers in the world, and FTSE Russell does a series of Sharia compliant indices in all our major markets around the world. And London Stock Exchange Group also recently acquired Refinitiv, which used to be the business arm of Thomson Reuters, and they've incorporated it into their business as the data and analytics division. So on the information and knowledge side, on the thought leadership side, the London Stock Exchange Group is very active in this area, and one of the key target markets that they're looking at is the Islamic finance space.
So this group manages the London Stock Exchange or just using the name?
They manage the exchange as well. So we have multiple businesses. The exchange is one, the index business is another. Our information terminals is another business that we provide, for which we have, I think, 400,000 users around the world. And lastly, we have our thought leadership. So
how can London Stock Exchange help diversify Islamic finance?
Sure. No, I think that leads in very well. And you know, my colleagues covered a lot of different areas of Islamic finance that can be helpful. And the one I want to focus on, really, given my experience, is capital markets. And I think when we talk about economic diversification, when we talk about investing in long-term or strategic assets like infrastructure and other things, capital markets plays a critical role in that development. And the reason for that, one of the primary reasons for that, is that capital markets has the ability to mobilize long-term capital. You know, when we talk about banking, banking is usually very short-term in nature. If you talk about retail consumers, if you talk about even corporates that have working capital requirements and things like that, this capital is always very, very short-term in its nature and cannot really be mobilized to invest in long-term investments. And when we talk about an economy diversifying, when we talk about investment in infrastructure, you need long-term capital. So things like savings, things like pension funds, you know, things like institutional long-term capital, that can be mobilized through capital markets. And what is particularly important when it comes to Islamic capital markets is many of the things that the colleagues have said, which is, one, it is inclusive. And we know from our research that the only way to achieve sustainable economic growth is to have inclusive economic growth. And if you marginalize significant parts of your population from access to capital markets due to their values and their belief system, then that is an inefficient capital market that is not geared towards meeting the needs of your community. Another key area where Islamic capital markets aligns with economic diversification is because by its nature, Islamic finance is asset-backed. It supports real economic activity. And we have seen a number of instruments, primarily Sukuk, where capital is raised to directly fund asset-based initiatives and infrastructure projects. And that is an area where the principles of Islamic finance can be utilized through capital markets to be able to invest in these activities. Another important factor is that by having efficient capital markets, you actually reduce risk. So when we think about liquidity risk, if you have liquidity and if you have depth in the market in terms of buyers and purchasers, then you help reduce the risk that issuers will face or investors will face, and thereby you bring down the cost of investment as well, which is very, very significant for that. So there is a risk diversification component. And an area where Islamic finance differentiates itself from conventional capital markets is because of its focus on real economic activity, because of restrictions around speculation and certain transactions, you have less volatility in the market, right? The conventional capital markets may amplify volatility by directing capital towards trends which can overinflate or underinflate certain trends. But when it comes to Islamic finance and Islamic capital markets, that's not the case, because all of their investments have to be backed by either real assets or real economic activity. And an excellent example of this has been in the last 2 years, as macroeconomic conditions have changed, as the Fed went through a period of increasing interest rates. We saw bond prices take a huge hit and decline significantly. But it was different on the Sukuk side. Many of the same issuers that had conventional bonds and Sukuks, the price volatility in the Sukuk space was much, much lower than it was in the bond space. So in some cases, you know, you would have up to 10% difference in terms of volatility of pricing from the same issuer. So it's not purely a credit risk consideration. There are other considerations in play which reduce the volatility in these markets. And the other thing that I want to mention is capital markets helps diversify the use of capital, right? When we think about banking and we think about any developing market, banking by its nature, the fact that it's using consumer deposits has to be very risk averse. So the investments that they make tend to be very, very risk averse. The economic markets, they tend to lend to governments, they tend to lend to large corporates, they tend to have very high collateral requirements when it comes to lending. So new industries, disruptive technologies, even medium and small enterprises struggle to get access to capital through the banking system. But in the capital market side, you can bring together, you can take that capital, that financial intermediation function out of the banking sphere and bring together industry-based markets. So we have examples of various funds and various sub-markets that are set up to specifically focus on areas like infrastructure, area like technology. We've seen entire markets that get set up, entire exchanges that are dedicated to a particular type of sector. It could be tech, it could be small enterprises. In the London Exchange, we have AIM. In many other markets, in Tadawul and other markets in the region, we know that there are dedicated exchanges that are focused on these smaller and medium-sized enterprises. And again, you're attracting capital owners that want to take that have the risk appetite to take that risk, and you're connecting it with investment opportunities that
Does
exist.
London Stock Exchange allow small companies, small cap?
So we have a separate exchange called AIM that focuses on small market cap entities, and they have different regulatory hurdles.
Belong to the same group?
The same exchange, yes, it belongs to our group, exactly. But the regulations that you would have on, say, Barclays or any major bank cannot be applied to a small entity. So we have a lower regulatory threshold, and we bring investors that are looking for that type of risk and that risk appetite to be able to invest in those markets. And the last thing that I want to say on this point is there is diversity in terms of the sources of capital. So this is an area where Islamic capital markets not only can mobilize capital from individuals and institutions, but can also mobilize capital from the Islamic social finance sector. So, capital that sits in Awqaf organizations and Zakat organizations can also be structured and mobilized to help direct funding towards areas. And in many cases, this capital can be jointly invested with other investors to tackle some of the commercial risk that exists in a venture, right? So that capital can address some of the higher risk segment that has a social impact, and
so the exchange allow for these impact bonds and impact papers?
Exactly, impact papers, impact bonds, and also dual financing. So for example, I'll give you an example in terms of when it comes to low-cost housing in many of the less developed Muslim markets, right? You have multiple tiers where the social finance can be used for the initial infrastructure development of a land, and the investor capital comes in for the actual development of the housing units and the sale.
Where does the exchange play? In the first phase or the second phase?
In packaging the entire package, yes. In packaging the entire package. So you package that capital through instruments that are then traded on the exchange. So exchange will bring liquidity, and exchange will bring a depth of investors to be able to make that paper commercially viable.
Interesting.
So these were a few short points on this topic, but I think that when we talk about economic diversification, the absence of an efficient functioning capital markets is a major hindrance, particularly in emerging markets, and this is an area of focus that all of us should be looking towards to help diversify our economies. Thank you very much.
Does the London Stock Exchange has a direct relationship with Dubai, Bahrain Exchange, and other exchanges in the region?
We do. So we have strategic partnerships with DFM, with ADX, with Tadawul, with Bahrain Bourse, and many others. We support each other in terms of capacity building. We support each other in terms of cross-listing of instruments and in terms of helping create depth. And most recently now, we are very, very active in supporting each other in terms of incorporating sustainability. So we share best practices in terms of what sustainable corporates should look like, what disclosures should look like. We have a voluntary carbon market, and we've worked with Tadawul and DFM and others to help set up their voluntary carbon markets as well. So there is a lot of collaboration amongst capital markets around the world, in emerging markets and in the developed markets.
Very interesting. Mujtaba, back to you. Between Pakistan Stock Exchange and London Stock Exchange.
Stock exchanges. So we do follow and we do look into their new ventures and things like that. But in terms of your question, whether we have a formal agreement with LSE or not, I think probably you would know.
Yeah, so I mean, we've collaborated together on many different initiatives and primarily on thought leadership. So I myself, as part of the Islamic finance team, have worked on reports when it comes to things like green sukuk. I know that Jeffy, which is an organization based in the UK that is a very close partner of ours, has worked with the State Bank on the Islamic banking survey that was conducted. I believe Mizan and others were a part of that. We helped publish and promote some of those findings. On the capital market side, it's not as close, the collaboration, but it's something that definitely we would be very
I think it's a good idea. We should explore that. And certainly the way you explained that the Islamic finance element in the London Stock Exchange, we should learn from that, and we should have some more relationship, keeping that area in mind, because that would be mutually beneficial for both of us.
Completely agree. And we are, very closely in touch with our colleagues in the State Bank, and we're hoping to roll out thought leadership initiatives next year, but definitely with the Securities and Exchange Commission as well, could be an area where we should explore.
Yes, you're welcome.
Okay, before I go to Ayad, I have a question for both of you. If we have cross-listing, would that make markets go in lockstep and therefore we lose the value of diversification? I mean, if there's a shock in London Exchange, it will immediately transmit it to Pakistan, to Dubai, to how to, I mean.
I think that an absence of cross-listing doesn't remove that risk, because as capital markets get interconnected, any shock that is felt in London, in New York, in any of the major markets is felt in Japan, or any of the markets is felt globally, right? So you always have that element of cross-link, which you can't avoid, because capital is international. Capital moves across jurisdictions very, very easily, and therefore any impact that happens in a major international market will have an impact globally. But I think that the advantage that it does is that you have a lot of international capital that sits in exchange like London Stock Exchange, right? When you have a cross-listing of an instrument, whether it's from the GCC, whether it's from Southeast Asia, South Asia, Africa, etc., it gives you access to a new form of capital. Now, the other thing that is there is that capital in emerging markets tend to be more risk averse, whereas capital in developed markets, where you have, I mean, I don't want to promote this, but you have hedge funds, you have very sophisticated investors, they're able to price the risk in a very efficient manner, and they're able to take on much of that emerging market risk as well. So I think there are a lot of benefits. We have certainly seen investor volume increase when there is cross-listing. There's no denying that. So I think that the benefits outweigh the risk. No market wants to be completely closed off, right?
Thank you very much, Brother Mustafa. Brother Iyad, how would Islamic banks benefit from capital markets? Do you depend more on deposits, or do you have a diversified sources of funding?
Yes, Doctor, thank you very much for this question. It's very important, I think. Usually, in general, the sources are the conventional sources that you have, which are deposits in general. But now we are embarking on new venture of sukuk. And this has been a relatively new venture in Jordan, the contribution of sukuk in raising capital and raising the, financing. Because, as you know, traditionally Jordan has been more of traditional banking related products and services. Hopefully now we're working on something new because the central bank has launched recently the green economy directives, which will definitely necessitate more focus on particularly eco-friendly instruments. And now we're talking about green sukuk. We're talking about environmentally friendly, because banks are going to be liable. And it's not going to be something good to have again. It will be compulsory for banks to comply. And the best to comply with the Islamic banks because it's, as I said, embedded in their DNA is socially responsible practices. So it will be easier for, particularly I'm talking about our bank, to adapt with minor changes and disruptions for the business model. And with working on those new models of the green sukuk and sukuk in general, particularly those which are related to Sharia compliant, because some sukuk in our view have some issues. So this will be the way forward. You cannot keep on depending. Now we talk about perpetual sukuks to raise capital other than actual resort to the owners of the bank to increase their capital. And this has been the case. Now we are looking at more models for perpetual sukuks to be issued. And there is really good appetite. The appetite is immense because, people are hungry for Islamically and Sharia compliant instruments to invest and to contribute. And the way forward and the future, I'm sure it's extremely promising because there is demand. Thank you.
Very good. Brother Rustam, do you work with capital markets? Sukuk.
I'm not really focused on capital markets. I'm more focused on tax matters. But I strongly believe that Islamic economy will grow not only through banks, but also through small businesses, small, medium-sized enterprises. And with this grassroots movement, we can achieve much stronger results specifically in economies with predominantly non-Muslim population. I have been to Russia like 15 years ago at first Kazan summit seminars, and it was very difficult to find halal food at that time. 5-10 years ago it was better, but still difficult. I've been to Kazan roughly 2 months ago at one of the legal conferences, and there were halal food restaurants at every single corner. So even if you go to a normal restaurant, they say, we have halal food. So, it was really grassroots movement. So people were asking for halal food, and restaurants and cafes, they think, we are switching to halal. The same is going to happen to Islamic economy if there will be, on the one side, demand, on the other side, knowledge how to build this business, and let's say the intention, the let's say trend to do this. So with this, I think it is destined to be successful. Thank you.
Very good. Thank you very much. I think we are almost about time. We still have 10 minutes for public, or 5 minutes only? Okay, so let's have the floor open for a couple of questions. So people, Fadda, over there. Win a microphone.
Assalamu alaikum wa rahmatullahi wa barakatuh. I have a question on promotional issues regarding diversifying the economic activities in the Muslim economics. What are the thinking from your perspective for the less developed economic Muslim countries? Because of nowadays all of you are working from your big organizations. We have a large group of people, less developed Muslim countries. So what are waiting from your side for them? This question.
Is the question clear? I could not get the question. Can you repeat the question slowly, please? Because the microphone is not very...
Yeah. From diversifying the economic activities, so what are the contribution from youth side, from London point of view, from a Jordan point of view, you are offering or thinking for the less developed Muslim countries?
Least developed countries.
Yes,
Okay.
less developed Muslim countries. Yeah, thank you.
So, Brother Iyad, how to support least developed countries? How could Islamic banking help least developed countries?
You know, I must say that least developed countries, probably one of the main supporters of them is, I think, the Islamic Development Bank. So Allah yufta wa mali.
Your bank is not interested.
No, we are interested. We are interested, but the nature of cross-border support usually is not there. In general, in part of our constitution, as a
You are
bank,
not planning to expand.
we had a plan to expand, but usually our markets are well known around us. Maybe we had a plan to expand.
ABC is a global company.
No.
Your parent company.
Yeah, but we are now planning to expand in Palestine. But because of the situation now, it has been a little bit halted. Hopefully, things will be better, and we will continue with our initiative. But probably our brother here is talking about more of a global perspective, less developed countries, which might be probably, organization the likes of the funds, Islamic Development Funds, the Islamic Development Bank, the Arab Fund for Social and Economic Development, probably would be more, the vehicle for such things. Maybe, I'm not sure if any of the commissioners can also dwell on this.
I'll see. Thank you very much. Brother Mustafa, does the London Stock Exchange give any special treatment for least developed countries?
I think, yes, I think that definitely London Stock Exchange Group has a focus, particularly when it comes to capacity building and thought leadership, that we try to promote. We have, various solutions that go beyond simply being an exchange. So we are also technology providers. We build the technology infrastructure for exchanges. So in many emerging markets, when we come in, we give them, access to the technology. We help set up the structure. We try to get best practices. A very good example of that on the Islamic finance side recently was that we helped the Central Bank of Iraq set up a auction system whereby they're able to mobilize the Islamic auctions that they conduct across the different institutions.
Why not the Bank of England?
Huh?
You helped the Central Bank of Iraq. Why was not the Bank of England involved?
I don't believe Bank of England is doing any Islamic auctions,
You will not get
unfortunately,
it.
but hopefully they will. But basically the idea here is to help connect the market, right? So we have trading solutions, we have integrated solutions. Our platform for doing money market trading is connected to many of the brokers on the money market side. So we try to help bring that connectivity into these markets.
Thank you very much. I think can we take one more question, Brother Rizwan? When Rizwan? Right. تفضل. Sorry, I have to pick one. تفضل. Microphone.
Check.
I think people are not very hungry, Brother Rizwan. People are not very hungry for lunch. That's why they are asking too many questions. تفضل.
Assalamu alaikum.
You don't have lunch now?
I think still for economic diversification, every economy has some comparative advantage. And they have to identify which areas or sectors they have comparative advantage. And then they have to focus on this. And then we need funding from where the money will come. We see the example of Al-Baraka Bank. Al-Baraka Bank becomes multinational companies. And almost all the Islamic banks should focus, because if an economy is, say, less developed, or we say poor Muslim countries, the rate of return will be there a lot higher than the countries which are more or less developed and so on. So I think there are lots of opportunities for Islamic banks to become multinational corporations. and establish Islamic banks all over Muslim countries, because the rate of return will be higher and its growth will continue. Otherwise, say for example, if the Islamic banks only concentrate in the mother countries, for example, it will be saturated. It will be competing with the same number of customers. So I think the world is open, and Islamic banks can do a lot to become the multinational corporations and can reap higher rate of returns from poor Muslim countries. And at the same time, they can develop renewable energy there. There are lots of resources. These resources, if there are funding, they can succeed in the long run.
Thank you very much.
Thank you.
So we really would like to get all the questions, but Rizwan will charge me and I will not be able to charge you. Therefore, we have to come to a close. So please join me with applause for our esteemed panelists. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh. Over to you.
Thank you very much, Dr. Sami. What a wonderful session it was on a very, very pertinent topic. And it sets the tone for the rest of the day, inshallah. We're not breaking for lunch as yet. So please bear with us. And, it's time it's still early in the day. We still need to consume, make sure that all our calories are burned. So please bear with us. We will, please join me in thanking, our dear panel here. I'd like to thank Brother Mustafa Adil for sparing his time and joining us. Brother Rustam Wakhitov for joining us from all the way from Russia. Mr. Ayad Asli, thank you very much for joining, the CEO of Islamic International Arab Bank. And Mr. Mujtaba Lodi, the Commissioner for Islamic Finance and Securities and Exchange Commission of Pakistan. And our dear Sheikh, Dr. Sami Suwailem, the Acting Director General of Islamic Development Bank Institute. Please join me in thanking them for the round of applause, please. Thank you very much. Can we have a group photograph if you don't mind, please? Ladies and gentlemen, we do have to break for a coffee break now, and it's time for Salah as well. So there's a prayer room upstairs as well as downstairs, and some people can actually pray in the prayer room as well, in the VIP room, which is opposite to the hall. We will reconvene in about 15 minutes time. So if you can please join us back in about 10 to 15 minutes, that will be wonderful. Thank you very much. The coffee and tea and coffee are served outside.
قصة النجاح اللي صارت ويعيشها بيت التمويل الكويتي اليوم بدت من سنة 73 لما تقرر تأسيس أول بنك إسلامي بالكويت، وبدأ منها بتاريخ خطواته الثابتة لأهدافه الأكبر، ويكسب ثقة مساهمين وعملاء أكثر وأكثر، وبدأ يكبر وتكبر معاه الإنجازات، ويقود المؤسسات المالية في ابتكار وتنوع الخدمات سواء اللي قدمها للأفراد أو الشركات. تعدى نجاح بيت التمويل حدود الكويت، وبدأت خطة التوسع والانتشار بدول مختلفة في الوطن العربي وآسيا وأوروبا، وتحول من أول بنك إسلامي بالكويت إلى واحد من أكبر البنوك الإسلامية بالعالم. لأن بيتك عاصر جميع الأجيال، ولأن بيتك يسعى للتطور في كل مجال، يقدم بيت التمويل اليوم نقلة نوعية في الخدمات المصرفية الرقمية والتحول لدخول عصر جديد مع مواصلة الالتزام بالعمل وفق الشريعة الإسلامية. ولا زال بيت التمويل الكويتي على قمة المؤسسات المالية الإسلامية بالعالم.
لأن جسرا من الثقة والوفاء يربط فيما بيننا، نحرص على أن نكون نعم الصديق لك، لأن أحلامك تهمنا، نسير معك على درب النجاح، لأن الصديق يدعم ويساند صديقه.
Test, check, one, check. Check, test. Check, test one, check, test. Test, check.
capital markets trade requirements of Sharia-compliant financial institutions. In 2021, DDCAP announced Ethos Terminal, the latest evolution of Ethos AFP, a multiple award-winning automated trade and post-trade services platform. Ethos Terminal brings additional integration functionality to DDCAP clients via an open market environment. This enables users full discretion in choosing trade counterparts and has been developed in response to user demand and Sharia preferences. DDCAP continues to invest in Ethos AFP, working with partners to deliver cost-effective, fully integrated automated solutions to provide our clients with a dynamic platform for their treasury and capital markets activity that also aligns with their Sharia, sustainability and corporate responsibility requirements. DDCAP aspires to connect the global Islamic financial market responsibly, and the development of Ethos AFP and its functionality is integrated within DDCAP's corporate policy formation, including our Sustainable and Responsible Actions Programme and the review and validation processes and procedures of our esteemed Sharia Supervisory Board.
For those who are here, apologies, there has been a change in the plan. This is actually lunchtime now. So the lunch is being served on the in the hall next door on the left-hand side. So we should be joining back at about 2 o'clock. So apologies for that trouble. I think there has been some last-minute changes in it. So I don't want you to miss out on lunch. This is probably the most important thing that we have in the whole day. Yes. Apologies for the inconvenience.
تعدى نجاح بيت التمويل حدود الكويت وبدأت خطة التوسع والانتشار بدول مختلفة في الوطن العربي وآسيا وأوروبا، وتحول من أول بنك إسلامي بالكويت إلى واحد من أكبر البنوك الإسلامية بالعالم. ولأن بيتك عاصر جميع الأجيال، ولأن بيتك يسعى للتطور في كل مجال، يقدم بيت التمويل اليوم نقلة نوعية في الخدمات المصرفية الرقمية والتحول السريع لدخول عصر جديد مع مواصلة الالتزام بالعمل وفق الشريعة الإسلامية. كان ولا زال بيت التمويل الكويتي على قمة المؤسسات المالية الإسلامية بالعالم.
جسرا من الثقة والوفاء يربط فيما بيننا، نحرص على أن نكون نعم الصديق لك. لأن أحلامك تهمنا نسير معك على درب النجاح، لأن الصديق يدعم ويساند صديقه، نقف إلى جانبك دائما. لأنك اخترت طريق التميز حرصنا على أن نصمم لك مزايا تستحقها. لأنك تواكب مستجدات العصر نوفر لك أحدث الخدمات في الجبال الشامخة والسهول الساحرة والشواطئ الذهبية. مهما تعددت ظروفك نمد لك يد العون أينما كنت. مصرف الجمهورية، المصرف الصديق.
Check.
Check.
Good.
Okay.
Press.
ये देखो
check test. Check test check.
Check 1 2 A this A check 1 2 check 1 2 this A check तो बेस थोड़ा कम की करके तो फॉलोइंग ज़्यादा नहीं आए चेक 1 2 टेस्ट ए चेक 1 2 ए
I will go send. Make sure each line. I will say. Shankara, food aparathunde. Hello, mic test. See, when I'm keeping close, only increase the volume. See, should be here. Hello, mic test. 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 Yeah, keep this level. Fix it. Tune it nicely, Ragesh. Hello, mic test. 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 Hello, maybe you can increase little bit more. Hello, mic test. Hello, mic test. Hello, mic test. Hello, 1 2 3. Hello, mic test. It's okay. Give me motion by. Give me second one. Hello. Ragesh, this is my distance. Hello, mic test. Hello, mic test. Hello, mic test. Hello, mic test. Hello, 1 2 3. Hello, mic test. Hello, mic test. 1 2 3. Hello. Okay, bring me the other. Hello. देखो, increase the level.
and on the takaful industry, which grew very, very impressively at 16% in 2022, but still makes up a very small segment, only $90 billion in total assets. Now, if we move to the ecosystem, again, there's a number of very, very interesting insights that we can look at. So starting with governance. So today, there is about 52 different jurisdictions around the world that have some form of Islamic banking regulation. Why that is important, and that's grown from 48 in 2021. Why that's important is because these are 54 jurisdictions where policymakers or regulators have recognized the significance of Islamic finance and have actively worked to introduce some kind of regulations around that. And the report contains details of the segments of regulations and so on. We have a Sharia scholars statistics as well in terms of the number of scholars that are operating in the industry. So as I mentioned, 1,800 Islamic financial institutions, 1,300 scholars that are represented on boards of these institutions. And when we look at the average disclosure continues to be low. Of the metrics that we measure in terms of corporate governance disclosures, only 28% of the disclosure items are disclosed by Islamic banks in their financial statements. Looking at sustainability, again, this is something that is a fast-growing segment of the Islamic finance industry. We know that sustainability on the sukuk side, sustainable sukuk have been growing at more than 80% year on year. They make up about $24 billion today, and they're one of the fastest growing segments within the sukuk space and significantly oversubscribed. So we look at oversubscription data. So your average sustainability or green sukuk is oversubscribed 4.4 times compared to your average traditional sukuk, which is oversubscribed 3.3 times. The report also provides information on assets held under ESG funds and various other metrics, including disclosure requirements, guidelines that are being introduced in different jurisdictions, and CSR activities as well. And finally, if you look at knowledge and awareness, the Islamic financial institutions that continue to offer Islamic finance education continue to grow in different jurisdictions, whether that is pure education providers or whether that is institutions that are offering degrees as well. And if you look at awareness, while seminars and conferences have continued to grow, one of the segments that is really shot has been virtual events or webinars. And we had nearly 700 webinars that were held in 2022 related to Islamic finance. That's almost 2 webinars a day. And it's very heartening to see we had tremendous growth in webinars during the COVID crisis, but that's not something that is dissipated. And the capacity building and awareness building for the industry continues to grow through the availability of these webinars. Ladies and gentlemen, that was a very quick overview of the report. Please do download the report and go through it in detail. It's free to download for everybody to access. You can either scan the QR code or you can access this through the web link, zawiya.com, Islamic Economy, Islamic Finance Reports. And if you come to our stall, we also have small business cards with the QR code available, and you can just pick one up and then download it in your own time. Please do go through this report, as we believe it offers a lot of value and insight for the Islamic finance industry. Thank you very much, and with that, I'll hand it back to the MC. Thank you.
Well, thank you very much, Brother Adil. This was very crisp, very informative, and as always, this report every year gives you the update statistics about Islamic finance growth all over the world in different key segments that helps the industry move, so on and so forth. Now, guys, this report was just another feature of what we have been achieving in terms of knowledge creation, capacity building, and in terms of, knowing and understanding about Islamic finance from this beautiful platform that we call the AAOIFI-IsDB annual conference. Now, since morning, if we try and summarize and wrap up to the point that we have here, what we have learned is, within the main ambit of the theme of the conference, is the fact that Islamic finance is very instrumental to achieve economic diversification in an array of perspective. Last session talked about so many other areas of Islamic finance that can help achieve the very economic diversification that countries and communities are sorting out for, especially in an environment that is post-COVID environment and so on and so forth. One of the things, folks, that will indeed shape not only the current trajectory, but also the future of Islamic finance is digitization and technological disruption that is fast gaining momentum day in and day out. Islamic finance, which I believe folks sometimes say that it is a subservient system, perhaps it is true, but I think given it has its own identity, Islamic finance is going to be no different when it's going to be affected either in a tamed fashion or an associative fashion or a disruptive fashion from what we call as technology disruption. Now, this is the importance of this conference, that in this conference, AAOIFI and ISDB, what they have done is they've tried to link each and every session, each and every speech in a bouquet where the connectivity is put forward for you to understand the whole big picture in a correct manner. And the next session is going to do very much the same. Now, folks, I mean, this session is that much more important, not only because it's going to shape the current and future trajectory of Islamic finance, it's also going to tell you what fintech holds, what digitization holds for Islamic finance, and vice versa too. As a matter of fact, if you look back and decode or unwrap what the disruption this fintech and digital technology financial solutions are causing, at the base of it, they're actually serving the very mandate of Islamic finance. And what's the mandate? To use risk-sharing based partnership contracts. You call angel investing, you call P2P lending, crowdfunding, whatever nomenclature you have through technology solutions, even venture capital back in Silicon Valley, all of it is actually at the base of it using mudarabas and musharaka and the derivatives of these contracts. As a matter of fact, what it does is it is actually automatically serving what Islamic finance is or supposed to serve. So there is a natural one-to-one marriage, natural one-to-one semblance in digitization, fintech solutions, and Islamic finance, and hence this session becomes that much more pronounced and that much more important. Not only that, but given the advancements that are happening in the arena of fintech. I don't know how much of you are already aware that in the field of AI, artificial intelligence, the Bletchley Declaration has just recently been signed. 28 countries are signatories. A couple of important GCC nations are signatories to tame the use of artificial intelligence, given the potential it has. Then, you know, the allowance of European Union supercomputers to catalyze innovation in artificial intelligence. These are those advancements, these are all those data points that tells you how much technology is going to shape up not only the financial sector, be it Islamic finance, but also our individual lives. So this is why, please, focus very much on this session that has all of these topics amalgamated in that. And guess what? We have a huge, group of scholars and experts in this domain coming from different parts of the world to regale you with their thought process and tell you what is in hold, what is in store with Islamic finance and digitization going hand in hand. So without further ado, may I have the pleasure to invite the chairman of this very, very important session, a future shaping session, a future tuning session, as a matter of fact, Mr. Asher Nazim. Asher, my friend, there you are. Please join us on the stage. Asher Nazim, folks, is Chief Executive Officer of Aon, a huge fintech guy. Last time we were on the same stage, we had a fantastic discussion going on, and I hope that it goes even better today. Joining the chairman of this session is Mr. Akeem Sheena, one of the speakers. Mr. Akeem Sheena. Mr. Akeem Sheena, are you around? Mr. Akeem Sheena is the CEO of Marble Capital Limited, Nigeria. There you are, brother. Mr. Akeem Sheena, ladies and gentlemen. My dear brother, my dear own Dr. Farooq Habib, who has been my class fellow in our times of Islamic finance as well. So we have a lot of synergy going on. Dr. Farooq Habib, co-founder of Alif Technologies, United Arab Emirates. Last but not the least is Russia, an up-and-coming player in Islamic finance. The Chief Islamic Finance Officer of Saber Bank, one of the prominent banks back in that region, Mr. Benham Gurbanzadeh. Benham, welcome to the stage. So without further ado, Asher, I leave the floor into your capable hands, and the floor is yours. All the best.
Thank you. So we have our final panelist, Mr. Osama Al-Khaja, board member.
Osama.
Osama Al-Khaja.
Oh, Osama, yeah. I don't have his name over here, so yeah. Osama, please welcome. Please welcome Osama. All right. Now we have all the panelists on the stage, so let's kick it off. All the best.
A very warm welcome to our esteemed panel. And we are here to discuss innovations in banking business that is disrupting the way banking is offered and consumed. The basis of competition has changed. How banks and their customers used to trade revenues has changed. For example, the payments ecosystem we are all aware of. The cost structures of financial institutions have changed. For example, a customer acquisition, onboarding of a customer could take, is down by 80%, 80-90% as a result of digital onboarding. Similarly, the understanding of the credit risk and therefore the pricing of credit risk has fundamentally changed as a result of new innovations. And the direct beneficiaries are consumers as well as small and medium-sized businesses, which otherwise did not have this access to affordable finance. Right? And then, very important is that innovation is not equal to technology only. Technology, as we will see, is solving a certain problem statement or capturing a certain opportunity, but there is a fundamental business problem or the opportunity which is the focus. So in today's session, what we'd like to hear from our panelists are some of the exciting business models which are coming up, underpinned by certain exponential technologies, and how they are changing how banking is offered and consumed. So we will start with, we'll have two short presentations to set the tone, and then we will get down to understanding certain other business models like open banking and AI with our two other panelists as well. So with this, let me first invite Dr. Hakim to please come take the stage and share with us how banking is being disrupted in Nigeria as a result of fintech and Islamic finance.
Bismillahirrahmanirrahim. Thank you so much. Good afternoon, everyone. Okay, so I have just 5 minutes here. So I'm going to be speaking to changes that we've seen, in Islamic finance and in fintech in Nigeria, in Africa, and of course the world. As we all know, fintech has been well endorsed and entrenched in Islamic finance, over the last couple of years. We all saw statistics at the last presentation, of what fintech has been able to achieve. The underpinning goal of fintech in Islamic finance is that it is allowed for you to use technology so long as it is preventing the use of banned practices, in transactions such as interest, gambling, cheating, and all the stuff that we know about in Islamic finance. Now, I want to speak to the sizes, that we've seen so far in Islamic finance. We know currently over the last few years, we've been told that the size of the fintech market in the OIC is in excess of 79 billion. And that is still less than 1% of the global fintech industry. But what we've seen is that in Africa, the size is still a lot smaller than this. And that gives us the opportunity that we are looking for, especially the growth of Islamic finance. 53% of the population of Africa are actually Muslims, which means that there's a huge potential for people to actually take advantage of Islamic finance. And what are the roles that we think Islamic finance and fintech can actually play? The first is financial inclusion. Financial inclusion is critical, because it allows, by using fintech, it's going to allow a lot of Africans who are usually, the bulk of which are still below the poverty level, to be able to have access to financial services. Microfinance and SME support is critical for Africans, and we think that fintech has been playing key roles in ensuring that we actually enhance that accessibility. Ethical investment is also a very, very important element. We are seeing a lot more interest, in Islamic mutual funds and Islamic investment opportunities, but we are not able to get to a lot of the population that are desiring these facilities or these opportunities. And that is where Islamic fintech is playing a key role and has potential to play larger roles. Of course, we've been discussing about the risk-sharing models so far, and also the need for us to implement that key aspect of our deen, which is zakat. So fintech innovations are trying to let people know that you can actually collect zakat and also distribute it seamlessly, across multiple platforms. Now, what is the role of fintech in supporting a lot of the growing MSMEs that we've seen in the last couple of years? The first is allowing them to have access to Sharia compliant financing. A lot of people are interested in getting funding, but at the same time, they want to move away from conventional funding, and that is what Islamic fintech is trying to do now, and also giving access to a lot of small microfinance businesses. We are also seeing a lot of increase in digital banking services. As we saw in the last presentation by the London Stock Exchange Group, we've seen that there's number of increase in the number of Islamic banks coming up every day. However, the quantum of apps that they are creating or digital platform they are creating is not as large as the number of brick and mortar banks that we are seeing. And Islamic fintech is just trying to get in and fix that gap. Also, there's need for us to have a lot more crowdfunding for startups, but I would like to just emphasize some items here, and that is the prerequisites that we need to ensure that we successfully leverage technology in Islamic finance. The first is the digital banking infrastructure. We don't have enough of this, and we need a lot of reliable core banking systems to support some of the innovations we are seeing from the Islamic fintechs. We see a lot of downtimes from some of the systems that are already in the marketplace. The regulatory framework is still a bit, underwhelming, I would say. We are not able to meet up, with the demands of the population from a regulatory perspective. So there is need for the regulators to play catch up and ensure they are ahead of the curve in order to meet the needs and requirements of Islamic fintech. Finally, I will speak to the need for us to utilize a lot more Sharia compliant payment systems. This isn't enough given the size of about 650 million potential users that we have on the continent, but Islamic fintech is trying to grow this. What is that magic wand that we think can fix a lot of the challenges that we are seeing by the usage of Islamic finance? Number one, by fixing the digital Sharia compliant payment systems, and by being able to implement a kafala structure, as was explained to us that happened in Jordan, where you're able to provide guarantees for some of the financial requests of the SMEs, we can actually unlock a significant pool, of financing that is needed for SMEs in Africa. And I think that if we're able to do that, Islamic fintech will play a key role that we'll all be proud of in the next couple of years. Thank you very much.
Thank you, Dr. Kim.
Thank you.
Very crisp, to the point, sets the tone very nicely. Let me now invite our second speaker, Dr. Farouk, who's going to talk about decentralized finance.
Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh, and hello everyone. So let me just quickly dive into the main topic of my presentation. So if you look at Islamic fintech right now, although we have seen that our brother Mustafa Adel has just recently launched the report, which will have new statistics and the latest figures. But in 2021, we see that Islamic fintech sector was standing at $79 billion market capitalization, and we were expecting that it would grow to $179 billion in 2026. So it's basically a growth rate of 18% almost, we would say, with which we are expecting that this sector would grow. And if you look at the heat map here, so it shows some interesting facts that you can see that like there are some advancements in digital payment solutions, Sharia compliant P2P lending, and innovative crowdfunding platforms. And we see that like why these sectors are thriving is because of three main technologies. One is artificial intelligence, second is blockchain, the third one is big data. But you can also see that like in the third line, we are talking about digital assets, and it's a new area. And of course, like blockchain technology has enabled us in tapping into this digital asset realm. And we see that like there is a lot of things are happening, although like people just see this phenomena as get rich quick scheme type of thing, that I meet people and they ask me that, okay, can I buy this token? Can I buy Bitcoin now, when it's gonna crash or when it's gonna going to the moon? But let me just tell you that it's a whole universe in it. And then we can utilize this technology and we can actually create Islamic DeFi, decentralized financial solution. In this slide, I would like you to focus on the thing that right now, if you look at the conventional DeFi market capitalization, it's $65.5 billion, which is very close to what Islamic fintech market capitalization is. But the interesting figure is that while Islamic fintech is going to grow with 18% growth rate, DeFi is going to grow with 46% annual growth rate. And we are expecting that by 2030, both DeFi and Islamic fintech both will be having the same, almost same market capitalization. So it's very, very important. But at the same time, I would say that if you look at what Islamic fintech is doing with this segment, because it is also a very fast growing segment of the financial sphere, so the answer is nothing. So to the best of my knowledge, there are very, very minimum number, like I can say 3 to the best of my knowledge, that there are some 3 projects there, but there is nothing there as well. And this blockchain and digital asset phenomena is actually changing the way we are thinking about our business models, and also that the way we can deliver a certain product. For example, I cannot disclose the name of the project, but so that's why I'm just using it as the name Project X as a pseudonym. And it's a real project, by the way, and alhamdulillah, I am basically part of this project. So it's like an Islamic DeFi project. It's a decentralized crypto native Murabaha platform that easily facilitates trade according to Sharia principle. As we know that in Islamic finance, Murabaha is basically plays a very crucial role in each and every product and service. Almost like 70% of the products are basically based on Murabaha. So what I'm seeing is that like if we can basically make it decentralized, then it can basically unlock so much potential for us. For example, it stands a testament to innovate in Islamic fintech and DeFi at the same time, utilizing blockchain for transparent and Sharia compliant transactions. And the platform integrates smart contracts to automate everything, number one, and then the compliance, audit, transparency is already there, built in as a feature of the platform itself. And it is just not about innovating for the sake of innovation, but I think that it's a revolutionary concept where transparency and compliance is at the heart of it. And connecting with the theme of our panel discussion, I see that like this concept, what we can do is like we can facilitate access to Sharia compliant MSMEs as well for them, because this platform has a very strong feature of composability. Composability means that like you can even compose different products on top of it. So you can tailor-made the solutions for SMEs and for their specific needs as well. And also at the same time, infrastructure financing can be done because of the blockchain and smart contracts. We can basically eliminate so many risks involved for the investors. And also it can provide economic diversification and inclusivity as a result. But DeFi has its own challenges. So for example, innovation adoption gap is there. So right now, we are even reluctant to see blockchain, smart contracts, or even cryptos, or as an enabler for us for innovation. So right now, I think that we have to bridge this gap to reach to that level where DeFi solutions can be integrated into the banking and financial services and products. Number one. Number two is like regulatory complexities are there, and I would like to see a certain level of harmonization, and I think that IOFI and central banks can play a big role over here to eliminate this gap and remove the complexities there. And then I would say that talent shortage is also a big problem, and that's where BIBF and other institutions can play their crucial role. And by the way, like one thing I would like to say, like it's about this case study, it's not just a concept. I have been working on it, and alhamdulillah, I am very much pleased to share this news that yesterday we actually run a murabaha complete end-to-end on this platform. So its MVP is ready. Inshallah, we will be launching it in 1 or 2 months. So what this exemplifies is that like transformative potential of blockchain and DeFi is possible in a Sharia compliant manner for the betterment of Islamic finance. And by embracing such innovations, we are not only addressing current challenges, but we are paving the way for innovation. And so I see that like collaboration is very, very important at this juncture, and because the technology is already ready. The only thing which I think that is important is change of the mindset, regulatory support, and education. That's it. Thank you so much.
Thank you so much, Dr. Farooq, and congratulations on Project X. Right, so let me now turn to our other panelists as well. And by the way, we will be taking questions. So if you've got any specific question, and I'll encourage you to have questions which help bring new innovations to life, right? So there are practical takeaways for all of us. But let me go to Brother Behnam. IsDB Bank, one of the largest banks in Russia, with also a very large Islamic banking portfolio. Now, how do you see in that market, and generally speaking, what new technologies, what new innovations are you seeing that will help propel Islamic finance?
Thank you very much. Bismillahir Rahmanir Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. It's a great honor for me to be here among the specialists and the leaders of the market. Thank you also for the invitation to IOFI, and especially for you for managing this, our panel. So, brother, as you know, Sberbank is the biggest bank in Russia, yeah? And we manage accounts more than the 110 million only retail clients. So I don't speak about the corporates. And what we see nowadays, so fintech and technologies help us to be more human-centric. We're considering our clients not as only a client, but a human, okay? We would like to be around them, together with them, and to create, we call them halal ecosystem, yeah, like a halal lifestyle ecosystem, in order to provide whole range of products and services which can satisfy them. And what we see number one, trust. They want to see from us trust, loyalty, and 100% transparency. In that case, we also think that, all these fintech services, all these products, even that collection, it should be in the frame of ethical values. So even when we collect data, when we manage this data, when we use this data, it also should be Sharia compliant, Again, this fintech focus and fintech values is generally in young population hands, yeah? And these guys, they don't think about risk management. They don't think about any, risks which can, damage them. They're young, they do from their heart, and this can damage them. So what we can do, we have to be more focused on financial education, We have to be more focused on financial risk education. We have to be very, sensitive to this matter, that this young generation should be prepared for.
Right. So Bena, talk to us about what is that one or two innovations that sets you apart. I mean, what are banks in Russia doing? What is your bank doing? We spoke earlier about Sharia angle as well, the compliance part, right? I mean, how to bring efficiency there, scale there. Any one or two aspects that stand out?
So we can speak about two of them. So the main one, it's creating digital halal ecosystem for our clients. In the center, we have a client, and around them, we provide him all ecosystem services, such as like digital zakat payment through Pay Zakat, a global system. Number two, access to all Islamic products and services. And number two, we're thinking now, and we're working on it, on Sharia advisory services based on AI access to our supercomputer. So as you know, Sberbank is the owner of 2 mega supercomputers and gives us good opportunities for data management. So this is number two, AI-based Sharia consultancy and the halal ecosystem.
Right. So what you're talking about, the first one is creating an ecosystem, a halal ecosystem, and providing access through in a digital manner. You are a bank, but this does not only talk about financial services. You're talking about healthcare services. You're talking about other
hospitality, medicine, hospitals. Access to our digital drugstore. Access to travel base. Russia is very big, and since 2020, halal tourism now is developing in Dagestan Republic, in Chechen Republic, in Tatarstan, and now we have to create this knowledge infrastructure. We have to create this database.
So very, very interesting, because one of the defining features going forward is the rise of the platform economy. And what platform means is typically not just a software, but platform is all about connectivity, making connectivity a lot easier. And then each institution out there is creating an ecosystem of services tailored to their target market, right? And it completely changes the paradigm, right? You're talking about a super app. For example, Kareem makes a big part, or Uber makes a big part of their money through payments transactions. They're not a financial institution, but they make a lot of money from payments, for example. Similarly, there are retail chains out there who are making a lot of money from financial services and not exactly from their core business. So what you're saying is banks are also then entering all the other. So this brings the financial and the other economy, the financial and the real economy together as well.
It is. It's make the good connection and synergy between the social economy and the financial economy.
Right.
And what we see right now in the market, so as a big player, as the owner of the biggest, let's say, banking app in the market, we have access to retails and to corporates. And these gives us great opportunity to connect them. Let's small example. We had Mudaraba accounts for management, our client's account. Based on their requirements, we create peer-to-peer financing platform. When the client can personally choose project, what we do rating. We know all that about this client, let's say who is on a Mudarib site and who is on Rabb al-Mal site, and we give them opportunities to connect and create this infrastructure, legal infrastructure and the operational infrastructure. So
very interesting. Then quickly coming in the interest of time, you mentioned AI for Sharia compliance. Now AI is a much used and abused word, right? And really in this part of the world, there is very less AI innovation. There is more of imitation, and that also in a limited way. And AI also starts from deep analytics and to business intelligence and to machine learning and then AI. Help us understand a little bit on how AI is playing a role with your bank.
Okay, this is more focused on machine learning. When you give information, we have fatwa base, in our bank. So we're working in Islamic finance for more than 5 years. What we do, we give access to machines to learn these fatwas and give the best result. Let's say I have around 15,000 fatwas regarding commodity murabaha or tawarruq or wakala murabaha. What we do, we give him task to this machine, just calculate and give me the final result. Is it acceptable? How can
Very
I use
interesting.
it? Yeah,
Very
in Russian law, for example.
And just to share what's happening in the region here, is a combination of ChatGPT and other large language models are being used to bring efficiency, 40–50% efficiency in the compliance function. And it's just unbelievable. Seeing is believing. It's very simple to implement. And the problem statement it's solving is with a massive load of customers or paperwork, etc. It's all sorted down to a matter of minutes in terms of understanding what regulations apply or what Sharia aspects apply to which situation. And I'm privy to some banks in UAE who are already working on it, for example. Yeah. So very interesting. So let me now turn to our fourth panelist, Usama Al-Khaja. He is the chair of Aspire Technologies, which is an open banking licensed entity by Central Bank of Bahrain. Brother Usama, so what is the problem or that open banking is solving, and how do you see it growing for the benefit of Islamic finance? Or even before that, can I have a show of hands? How many people are familiar with how open banking impacts their business? Can we have a show of hands?
Thank you.
Okay, so I can safely say 99%, for 99% of the population here, it's a new topic. So over to you.
Thank you, Brother Ashar. Assalamu alaikum wa rahmatullah wa barakatuh. Actually, open banking solutions and open banking technologies are very new not only in this region but in the entire world. Relatively, it is a new category of fintech. It's actually it's about fintech with focus more on sharing of data and giving access to third parties to develop data solutions and analysis. It started in the UK. It's in 2000. Started, I think, probably 7 or 8 years ago. In Bahrain is the first country in the region here who launched the open banking, and recently Saudi, Riyadh, has launched also their strategy for open banking, and UAE as well, and many other countries. The idea of open banking is to provide or allow others to provide an open banking services to the clients. So this is one of the things that open banking can provide, is basically open banking solutions are not anymore limited to banks to provide them. They can be provided by third parties and by others like telecommunication companies or consumer services and others who could also provide banking services for their clients, some type of banking services. And to enable that, they need to have to develop their own platforms and solutions, and they need to have access to clients' data. So there are lots of, as I emphasized on transfer and issue and analysis of data. This is one type of open banking that could create. The other one also, it enables the clients or the users of open banking to access their banking data and all their transaction in one page, very unified, standardized, same page. So if I have, let's say, Susama, I have bank accounts with 6 or 7 different bank accounts. With open banking data, I could monitor and use my bank accounts from the same page. And not only that, I could also, and they are all standardized, unified. It gives me much clear understanding of my transactions, my banking services, as well as my credit risk and my credit, and also more of that, I could even shop with other banks. I could, within open banking, I could look at what other banks can provide me for this credit. Let's say I have a deposit of $10,000, with the X bank, okay, at X profit rate. With open banking, I don't need to check with every bank and tell him how much you can give me. I will be able to know what is the best bank for me. And the bank will be able to approach me also as a best, as a targeted customer. So there are so many applications. This is very few examples. There are so many other applications that open banking can do. It's really, it's a revolution, I can call it, in the banking industry. Right. And it will help. It's just the beginning. It will depend a lot on data, on the customer data, and it can open, as I mentioned, create lots of opportunities for businesses and for, as well as for clients, for individuals, and for other organizations.
Right. So no, this is very helpful. So just to summarize that. So at the heart of open banking is that customers, be it individuals or businesses, are given back the control of their data, which until today was only with the banks who had monopoly over that data. So from a regulatory perspective, banks are now mandated to open up their data tap and let the data flow out. And if it's my data, then I can consent who can see it and how they can use it. Number one. Number two, as a result of which, what can you do? Why is this important, as Brother Sama rightly said? There are a number of use cases, but especially for Islamic and for finance space and for SME segment. What it does is, it gives you a unified picture of all your financial and banking transactions. Once the unification is there, one dashboard is there, at the back end, there are some very powerful algorithms which are working, which are actually analyzing in terms of how your future financial conditions would look like. So for an SME, and none of the banks believe on the financial statements presented to them from the SMEs, right? But here it is, the connectivity allows for all the real-time transactions and all the financial data from across all banks and markets to be in one place. It is then analyzed using some very powerful algorithms, and as a result of which it gives a picture of what the credit profile of that business looks like, and therefore how that credit risk should be priced. So until yesterday, this was being done based on, let's say, 10 data points. As a result of open banking, there are 1,000 data points which are informing the credit decision. And therefore, the profile of the SME, the credit profile of the SME is very, very different. It gives comfort to the financing institution, and it gives access to affordable finance, a better price to SMEs. So massive. And just to share, Brother Sama, you mentioned about UK getting started with it. In 2018, which was year one of open banking in UK, in very simple terms, there was, guess how much request for data or API calls? How much request for data was there? Any idea? Some of you may be knowing 60 million. In year one, 60 million requests for data. Fast forward 4 years, 2022. Guess how much requests there were? Any guesses? Come again? A billion? Any other takers? 1 billion? Okay. Any other takers? 6 billion. From 60 million to 6 billion calls for data. And come July 2023, 5 months ago, 1 billion API calls per month. And this only represents 10% of user adoption, customer adoption. So imagine as the customer adoption goes up to 15% and to 20%, what is the seismic shift that is coming our way? How financial institutions read credit and how they price it, and who does SMEs buy from? There is a paradigm shift. It's like televisions, right? 20 years ago when we were growing up, there was one channel for a limited time. And today there are multiple channels and hundreds of programs. It's that kind of seismic shift that's coming our way. And the problem that it is solving is access to finance and affordable finance. So some very powerful stuff. So what we heard about is, okay, so I'll come to questions now very quickly, but what we heard about is something very interesting. We heard about Nigeria, a very populous Muslim country, talking about compliant payment gateways and certain Islamic fintech which still remains small in size, but taking off. We heard about decentralized finance, a Murabaha platform that will make it, what I noted is, more cost efficient, more compliant, transactions, right? I mean, so it brings efficiency. Yes. We heard about platform economy and how it gives access to halal ecosystem. We heard about artificial intelligence and how it helps in Sharia compliance, right? And then we heard about open banking and how it enables financing to small businesses, small and medium businesses. I will now turn to my panelists, and my question to you is, if I'm sitting in the audience, I'm hearing all this stuff, my question will be, is it all a Mickey Mouse play as far as Islamic finance is concerned? I don't see a real impact yet on the ground. Is it a Mickey Mouse play? Is it a mainstream play yet? What will it take? Specific question, what will it take for some of these fintech businesses, whether they are banks or independent fintechs, what will it take for these fintech-enabled businesses to achieve a credible scale? So maybe I can start with Benham.
Yes, sir, thank you. From my point of view, it's not a Mickey Mouse game. It's a real opportunities, and we know our goals. We see increasing population of Muslims in the world. We see increasing of young.
But brother, let me be the on the other side. Increasing, but what percent? 1%, 3%, 20%? Do we have a view? Because if it's because many of these fintechs, banks do not have the mindset yet, and they're still in the experimental phase. 2, these fintechs are very small. So how do we get to the credible mass? While we are doing some very good stuff in our own pockets, how do we get to a credible mass so people start taking us seriously?
So the first, it should be bridges between the states and banks, the biggest players in the market. The state and the banks, they should realize, they have to realize that these startups, this whole industry is a big startup. Yeah. We have to focus on it as a startup. We have to invest not only money, right. We have to invest our time, we have to invest our ability and our own knowledge. Right. And at the same time, I'm telling the same things, in Russia, guys, there is no a place for competition right now. We have to create an industry. We have to create the industry.
It's a startup, collaboration is the way forward. We've heard this word or this approach too many times. It is the right approach, I agree. Are we seeing enough of it, Brother Osama?
Well, brother, I think...
Let me help you.
Are we seeing enough collaboration? Are we seeing that mindset?
It depends on the... we are still, I think this industry, we're speaking about fintech, whether it's not more than 14 or 12 years old. Right. And I heard about fintech in 2012, that's the beginning. And this was too early. So and I don't think, so we are still in the beginning of this journey. We see there are so many things, little things. For example, who are expecting that one day will come what we will not use cash. We will not carry cash with us. Right. And I was speaking to a CEO, a bank CEO, 5 years ago, and I told him one day in Bahrain, people will not use cash. And he told me, I don't think so, because maybe in Europe, and it's still early, maybe after 20 years or... And he's of very reputed Islamic banks. And it is so fast that cash...
Any success case studies that come to mind?
Well, success case studies locally here, there are so many initiatives. The wallets is one of them. The wallets become very popular now. in whether they are national wallets or even like in China, they are with Alipay or the WeChat Pay. They are very popular. This is one. So this is just the beginning, as I mentioned. Now, speaking about SMEs, for example, maybe credit flow, you take it as an example. It becomes very popular technologies. SMEs financing and digital platforms.
Right, so clearly there are some success case studies as well. Same question to Dr. Hakim. What will it take for Islamic fintechs to scale in Nigeria? What are 1 or 2 or 3 impediments or opportunities?
I think one of the key support factors that we need to get the Islamic fintechs to grow is support from the regulatory agencies and also support, from the
So
huge role to play.
They have a huge role to play. What will jumpstart it, in your view?
I think if we have success, in any innovative payment system that's able to rival or perform as successfully as some of the unicorns that we have in Nigeria, if we have a successful Islamic fintech, that would be that transaction that would jumpstart this success. Yeah.
Okay, let me turn to Dr. Farouk. So slightly different curveball. So how does all this buzz that we hear about Islamic fintech, how does it feed into the purpose, maqasid al-Sharia? How does it?
So I think that if you look at Islamic law, if you look at the Islamic legal maxims, so they allow you to innovate in any way. So like al-aslu fil ashiya'i al-ibaha. So we have these kind of Islamic legal maxims which guide us, saying that like you can innovate and you can do whatever you want, even in fiqhul mu'amalat, as long as you are not falling under the circle of impermissibility, you are okay.
So talk about some innovations that feed into helping the Sharia part of Islamic finance progress.
So if you look at Brother Behnam also said that, okay, like they are using now artificial intelligence for Sharia advisory. Now, one question might be like, it means that like we are creating a robo-mufti or what? But then I would say it's a very good and innovative idea. And at least it can basically give us a smart research engine. You understand? So like, it's like an assistance. Now, if you look at that, how we were collecting fatwas, writing them, it's a very long and lengthy time taken for this one, because we are doing it manually. So then we can use this artificial intelligence to do it, that it can basically reduce the time to basically to give a fatwa, for example.
Very
so we can
interesting.
do it.
So robo fatwa or robo mufti is a key takeaway for me. Right. So in the interest of time,
you completely got in the wrong direction. Now, for Sharia scholars will be after me.
Not at all. So in the interest of time now, let me turn to the audience and, let's have 1 or 2 quick questions, please.
Thank you very much, first of all, for lending me your mic. What a fantastic session, amazing information. Africa, Project X, I heard it in one of my cartoon series I used to watch. Cyberbank, that's amazing what you guys are. This is a surprise package for me, to be honest, and open banking. Sharia compliant payment system, Murabaha contract-based Project X, and AI-based Sharia compliance and whatnot, an ecosystem, and then crazy sort of open banking going on. Fantastic innovation being discussed, but question is, what are you guys going to do to tame the cyber risks? This is cyber risks. This is going to be a make or break for fintech.
Clear. So that's one. Let's take 1 or 2 more questions, please.
Thank you. Considering the lack of Islamic banks, their their applications, their way of things. What is missing, do you think? And how we can complete it by having a super app. If you design a super app, a platform, what it could be in it? Thank you.
Okay, so let's start with these two questions on the cyber risk. I'll turn to Benam, given your banking background.
Yes.
So what needs to be done to protect against increasing cyber risk as we move towards more fintech play?
Okay, as I told before, we should be focused on financial education of our clients. This is number one, be more transparent, be more trustable for them. And number two, we have to digitalize risk management services of the bank. This is our main idea. So today, our risk management team are focused on it. So all risk procedures, risk compliance should be fully digitalized,
right,
in order to avoid, human being mistakes.
So, Dr. Hakim, would you want to take this question as well?
Yeah, I would just...
What needs to be done on cyber risk?
Yeah, I think there's still need for us to be a bit more agile regards to compliance with data protection, and also try and engage what we call Sharia-white hackers, to test a number of these systems to be sure that we are not exposed, because once we get exposed and one or two of these big apps, get, exposed, people will lose confidence in using them. And we don't want that to happen.
So the other question is very interesting as well. What is missing today? What, in a super app, what service, if I understand, in a super app, what additional services would the market want? Right, that Islamic finance, Islamic banks are not providing today. Farooq, maybe we can start with you.
Again, I will go back to my point that we have to change the mindset. So like right now, even in the Islamic banking industry, we have the mindset of product ownership. Like we cannot offer a product if we do not own it. So that I think that this has to change. You can offer a
but give an example that what additional features or services or solutions that a super app can offer.
Highly customizable, tailor-made products. That's it. Because I think right now, customers' expectations are completely different from.
So what you are saying is hyper-personalization. Okay.
So yeah,
super app.
Yeah, super app. So
what additional features would you want to add to a super app, Islamic super app?
So 3 things. Number one, it's save time for our clients. This is number one. Our clients say, so today my 1 hour is less than 1 hour a year ago. So please help me to save my time. This is number one. Number two, family values. They want to know that their children, their food, their tourism, their medicines, everything, it's Sharia compliant. They don't want to waste any time on it. In number three, it's security, data security. They want to see their data is secured. Right. This is number three.
Brother Sama, any features you would want to add in an Islamic super app? What features or solutions or capabilities? You can have this mic.
Sorry, it's okay.
Here you go.
So I'm your super app assistant.
Thank you. That's a very interesting point, right? I mean, so go on.
I need you. Well, thank you, brother, for the question. I think for super app, first, I think providing personalized services based on data analysis, based on big data and machine learnings, and goes all the way to AI solutions within the super app. Now, the personalized services are not necessarily financial services. Also, even the non-financial services, I think very important. Clients should receive non-financial services like advisory, best advice for what. For me, like Osama, I should receive an advice from the super app, knowing my personal data, after analyzing my data, it will give me advice. Osama, you should do the following steps. Reduce your exposure in this area, increase. Here you have opportunity to deploy your liquidity. and here and there. And it should be very personalized, and it can be. This is not, this is possible to do it. So I think this is another part that Super App can and should provide, which will make, it will save lots of efforts and resources. It will be, and it will be much more efficient.
Very helpful. Dr. Hakeem, what is your pick? 2 or 3 aspects in an Islamic super app?
I think a super app that I would like to have is one that allows me to carry out a lot of transactions, different types, and across multiple geographies.
And across multiple geographies. So I'll take, my 3 takes will be zakat calculation, number 1, across all my different asset classes. Number 2 will be on the deposit banking, how are my funds being used by the bank? Is it all being transmitted out cross-border and parked in US Treasury or real estate? Or is it into affordable housing? It's not going to be a direct 1-to-1 proportion, but is it into affordable finance? Is it into affordable housing? Is it into entrepreneurship, etc.? And I should be able to move my money based on if the bank is investing per my financial value. And third, smart spending. So I should be able to understand where I'm shopping. Does that support Gaza genocide, for example? Or is that company clean? And if that is there at the tip of my fingertips, then this is what I want from Islamic Super App. Last question, please. We are out of time. Please.
This is from operating experience. The only and the best way of combating and taking care of cybersecurity is pay attention in the operations department. There is nothing that can be done automatically. And they actually imply this in the United States by the regulation called Regulation E, which means if any customer loses money through fraud, whatever, we have to give him immediate credit. And then you go and sort it out. So my advice to you is Islamic banking or not Islamic banking, there is nothing called Islamic influenza and Christian influenza and Jewish influenza. And influenza is influenza. And you have to pay attention to details.
Right, sir.
You cannot do it automatically.
I appreciate it.
And I want to share that with you, number 1. Number 2.
But any questions, sir?
No, I just want to make a comment because I am getting the impression that it's all done honey and beautiful. It is not honey and beautiful. It is hard work and paying attention to the trust that people put in your neck as a banker. If we don't do that and we rely on automatic systems, then you are doomed. Thank you very much.
Appreciate it. I think we are out of time, so we'll end last 30 seconds for each of our panel here. My favorite question. In the next 12 months, what's your personal commitment to promote Islamic fintech? Starting with Brother Osama, 30 seconds.
Well, in the next 12 years, our commitment.
Thank you. Thank you. Venam, 30 seconds.
Just 10 seconds enough. Digital Islamic neobank.
In the next 12 months. Excellent. Dr. Farooq.
For me, it's obvious actually. So I will be promoting blockchains and smart contract-based solutions for us to promote Islamic
Project
finance.
X, decentralized finance. Dr. Hakeem.
We're going to support a new bank that will be able to give SMEs access to finance very, very quickly.
SMEs access to finance, and from Aeon side as well, next 1 year, access to finance to 10,000 SMEs in the region. Thank you very much.
Thank you very much, gentlemen. Ladies and gentlemen, a big round of applause for our esteemed panelists and the session chair. What a fantastic session. Let's have a group photo, guys. Brother Usher, a group photo, please. Usher. Thank you very much, gentlemen. Thank you very much again. After this heavy dose power pack session, may I now call upon for the launch of the 14th Annual Global Islamic Finance Report, Gifer 2023. The launch of Gifer 2023 by Cambridge IFA UK. Do we have the presence of Professor Hamayo Dar for the launching? Ladies and gentlemen, please welcome a huge round of applause to Professor Dr. Hamayo Dar. Yeah, they will make it work. It was with one of the speakers. Is it? That's true. Bismillahirrahmanirrahim. It works, right? This way, right? Okay. Yeah. Bismillahirrahmanirrahim. First of all, I would like to thank AAOIFI and these sponsors and supporters of this event for giving us this opportunity to share some of the highlights of the 14th Global Islamic Finance Report. We published our first report in 2010, and this year, this is the 14th annual edition. And every year we have a central theme. This year's theme is climate financing and Islamic finance. The highlights of the report are like this one. We have, I think, 15 chapters of the report. The first 2 chapters are regular ones. They are common. First one is on the global Islamic financial services industry, the overview, and the second one is on our Islamic Finance Country Index, which we launched in 2011. In IFSI, as opposed to IFD, which was mentioned earlier, we include about 55 countries only. So in terms of coverage, it's a very small sample. We believe that if we include more than 50 or 60 countries, the information content doesn't improve significantly. So I would come to this IFSI thing towards the end, but just a quick kind of introduction. Chapter 3 is on overview of climate financing and its importance. So which is very much consistent with the theme of the report. Chapter 4 is on role of the Islamic finance in financing climate action. Chapter 5 is on innovative Islamic financing mechanisms for climate action. Chapter 6 is on importance of public-private partnerships in financing climate action. Chapter 7 is on growth and potential of the green sukuk market, something which is becoming very important in Islamic finance. And Chapter 8 is on the role of governments and multilateral organizations in financing and promoting climate action in the OIC countries. And then we have other chapters. Chapter 9 is on the potential for investment in low carbon and renewable energy infrastructures, implications for Islamic finance, and so on. So we have chapter number 10, 11, 12, 13, 14, 15, 16. So different aspects of climate financing and its relevance to Islamic banking and finance. A very comprehensive report. It is like a report. It is a professional report, but with a lot of academic rigor. A lot of reports, without criticizing any reports, their focus is on the industry.
So in our case, we would like to bring the academic perspective as well. So when you read these 300 pages, there would be a lot of text, like in an academic journal, but at the same time, we bring the relevance of the industry as well. So after this one, I would like to share what is our perspective on the size of the global Islamic financial services industry. The intention is not to create a controversy, because there are different estimates of the global Islamic financial services industry. In our calculations, at the end of 2022, December, the global Islamic financial AUM was 3.805 trillion US dollars, which is slightly different from what was reported earlier. And the difference could be because of the methodology and the coverage. Okay. In our case, I can give one example. A few years back, we would not look into the rural banks in Indonesia, for example. So we would not cover, because we did not have access to the data on rural banks. There are thousands of rural banks in Indonesia, and hundreds of them, they are Islamic banks. So we have started including these institutions in our report. So at the end of December 2022, our estimate of the global Islamic financial services industry is 3.805 trillion. And we keep an eye on the industry. By now, definitely the size of the industry has surpassed 4 trillion, which we would be reporting in our next year's report. In terms of the growth, annual growth of the industry, it was estimated to be 19.75%, which is very interesting when we look at this graph. About 15 years back, 15 years, 14, 13 years back, until 2012, we saw this high growth of the industry, which was then followed by a low growth period between 2013 and 2019, when consistently there was a decline in the growth rate of the industry. Of course, growth was there, but the rate of growth, okay, that was actually declining. In 2020, we started seeing an increase in the growth rate. So in 2020, 7.61% growth, 2021, 8.06%, and this year, 19.75% growth. And we believe that the industry would be moving to this high growth rate kind of regime. And there could be a number of reasons, but we looked into the interest rates prevailing in the global markets and different jurisdictions. And interestingly, we find that when interest rate is higher, Islamic banking and finance does well, okay, in terms of profitability and in terms of growth. So now that we have high interest rate regime, the Islamic AUM is increasing with a very significant rate. This is something, a kind of correlation between the interest rates and the increase in or change in Islamic AUM. A lot of things can be attributed to this one, but in order just to provoke the industry leaders over here, this is a very interesting statement which the report has. The real factor contributing to the growth of Islamic banking and finance is what it happens to abolish, increase in interest rates. So I think, okay, this is something a lot of people would like to look into, and this could be a subject of further research. Coming to IFSI, Islamic Finance Country Index, this is the first multivariate index attempting to rank different countries of the world in terms of their potential and leadership in Islamic finance. So we have been publishing it since 2011, and first 5 years in our index, Iran was number one. However, over the years, importance of Iran in our index has gone down, and it's primarily because of lack of access to reliable information. Okay. One country which has assumed increased importance is Saudi Arabia. So Saudi Arabia for last 2 years, this is number one in our Islamic finance country index. This year, this is followed by Malaysia, and a very unexpected entry is Pakistan, number 3. And there are reasons for this one. So you will see the countries, Saudi, if we ignore that one, Malaysia, then we have Pakistan, then we have Indonesia, then we have Iran, then we have Bangladesh. These are the countries with significant Muslim population. So in our methodology, population is an indicator of the potential of Islamic banking and finance in a country. Given this trend, we believe that, and we are the first one, and this could be a very brave statement, within next 10 years, 3 Muslim countries of the world, they would emerge as the true global leaders in Islamic banking and finance, and that would be Indonesia, the largest economy in the OIC bloc, followed by Pakistan and Bangladesh. So these 3 countries, those who are looking into some kind of future planning with respect to Islamic banking and finance, they should be looking for these 3 markets for growth and their presence in these markets. And this is something we are mentioning. Bangladesh is actually a country which is becoming more and more important. And given this importance of Bangladesh, we have started looking into Bangladesh. Unlike some other countries where people, they would like to showcase their achievements and potential in a big way, Bangladesh is a country where people are very, they wouldn't like to talk about their achievements. So when we look at the domestic Islamic banking and finance sector in Bangladesh, this is very significant. It's about 1/3 of the total banking and finance sector. So as I said, this would be Indonesia, Pakistan and Bangladesh, which would emerge as global leaders in Islamic banking and finance. We brought a lot of copies of Gifer, but after the launch in the morning, they have just disappeared. But those of you who are interested in going through a serious document of about 300 pages, we would be very happy to provide the soft copies. Thank you very much.
Thank you very much, dear Dr. Dar. Always revealing information is given to the stakeholders from every year's Gifer launch, and what a prominent information source it is fast becoming already, if not. May I now have the pleasure to start and call upon the stage of the speakers of session 3. Session 3, ladies and gentlemen, highlights the importance of benchmark rates and the challenges for Islamic finance and the opportunity for a change. Now, guys, remember, whatever we have been listening to, the expert thought process that has been dished out to you in so many themes and in so many ways, including the last session on what fintech solutions and digitization has on offer. One key thing is going to be the fact that how are you going to price those solutions? The risk return, hence the pricing mechanism, the correct pricing is also going to be a crucial factor in gaining momentum and traction of whatever we do or gain in Islamic finance, be it current or future trajectory of Islamic finance. So benchmarking, the whole concept of benchmarking itself becomes that much more important, because this is where the whole risk return profiling, hence
its conceptualization and implementation of the pricing mechanism, the pricing that you put, and so on and so forth. So this is a very important session because this deals in a very important topic. May I have the pleasure to invite the chairman of the session, an IDB Nobel laureate, Professor Dr. Muhammad Kabir Hassan. Ladies and gentlemen, please welcome Professor Dr. Kabir Hassan. Professor Dr. Kabir Hassan is the member of Governance and Ethics Board of AAOIFI, Chairman Education Board of AAOIFI, and Professor of Finance in the University of New Orleans in the United States. With him, joining on stage are our expert panelists to discuss this very core issue of benchmarking. May I have the pleasure to invite one and only the great Dr. Yahya Abdul Rahman. Dr. Yahya Abdul Rahman, the chairman of Lariba Banking Group, United States. Mr. Ghulam Muhammad Abbasi. Mr. Ghulam Muhammad Abbasi, please join us on stage. Our guest and expert from Pakistan. He is the Director, Islamic Finance Policy Development Department, the Central Bank, aka the State Bank of Pakistan. Thank you very much, Brother Abbasi. Of course, our own dear brother, Dr. Zahid Rahman Kokar. Dr. Zahid Rahman Kokar, please join the stage and grace us with your presence on the stage. Dr. Zahid Rahman Kokar, Islamic Banking Expert, Regulation and Development of Islamic Finance Division, Sector Development Department, the Central Bank Sultanate of Oman. Wow. Happy to see the Omani presence here. Cool. All right. Last but not the least, of course, our brother, Dr. Shaheen Shayan. Dr. Shaheen Shayan, come on the stage and discuss about benchmarking. Dr. Shaheen Shayan, are you around? There you are. An important topic, ladies and gentlemen, because remember, it's all about managing risk return and hence pricing of the risks. Dr. Shaheen Shayan is a senior management consultant, global investment and risk management advisors, also from United States. So the stage is full of US nationals. So Professor Kabir, the panelist and the whole session is all yours. Go for it.
Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuhu. Well, it's very late afternoon. So let's start with our last session of the day. The title is High Benchmark Rates, Challenges for Islamic Finance, an Opportunity for a Change. So actually, this is a very important but very difficult subject, I must admit, because one of the area of Islamic finance and economics, the monetary, Islamic monetary economics is least researched area. And we just got this data. We just got the data from Dr. Humayndar that there is a connection with interest rate rise and the profitability of Islamic banking. So probably taking this cue, let me set the stage to help our esteemed panelists to navigate the different questions, the concept itself. So let me start with why there is a high inflation. What are the key drivers of this high inflation in recent time periods? The first one, everybody talks about the supply chain bottlenecks that started pandemic and is continuing. There are different measures, there's a different empirical studies done. One of the numbers that I want to say, the time it takes when you make an order and the time it arrives in a port, it is the historically high level. It still is going in that direction. This is one of the data that I want to share with you. Second one is shift in demand towards goods and away from services. So people are buying more and more cars, and significant shift to consumer preferences, spending on goods experienced a dramatic rise. One of the examples in the US experienced a notable impact. The used car sales has gone up more than the new cars. Number three driver, the aggregate stimulus and post-pandemic recovery that has been followed by every country, led by the United States. United States spent about 5 trillion USD stimulus package in order to jumpstart the economy. So there are tons of money, liquidity in the hands of the public. So there are two groups of people in the academia again, those who think that this theme persistent, this inflation is going to continue. The another group says that this trajectory is going to go away. But we see in the United States, the high interest rate followed by Federal Reserve policy is having an impact. So the inflation has gone down from 9.5% to the highest to about 3.25%, but interest rate has gone up almost 0% to 5.25 to 5% federal funds rate. Number 4 is shock to labor supply. The labor market disruptions from the pandemic is still continuing. In the United States alone, the participation is about 1.5% lower before the pandemic, which is equivalent around to 4 million fewer workers. And of course, it varies from different countries. And whether the shock will continue, there are different views. But one of these things is, Larry Summers says that this is going to continue the labor market shortage. Number 5, the supply shock to energy and food because of what is happening in Russia and Ukraine, and of course what is happening in Gaza right now. The invasion has led to a surge in energy and food supply prices globally. Now, the role of Russia and Ukraine is very important. Both Russia and Ukraine are major commodity exporters. They two together export 30% of world wheat market. Now, this disruption, war and sanction have disrupted commodity markets, causing global prices to soar, notifying affecting oil, natural gas, and wheat prices. Now, the effect of invasion may lead to a longer than expected persistence of inflation. Given this thing, we academics like to talk about in demand-supply framework. So, this demand has increased, supply has decreased, leading to inflation rate to increase. So this is coming from our understanding of how the economy, the market forces work. Now central bank, of course, has responded different ways. One of the responses is contraction in monetary policy, because if you increase interest rate, the idea is the inflation is going to go down, but also with a corollary damage to the economic recession. But fortunately, the data from the United States doesn't pan it out. United States, the economy is doing great and inflation has gone down. And many countries, the experience is not the same thing. Now, central bank all over the world, to my understanding, following the same contractionary monetary policy. So there is an idea called 2% inflation and Taylor's role. Now, what is happening whenever the central bank governor or central bank monetary policy analyst target interest rate, they are more concerned about inflation going above 2%, but less concerned about inflation going down to 2%. If you talk the central banker all around the world, they will talk about they have an anti-inflation bias, so that's going to work in favor of reducing inflation in the future. But there is also a talk, the 2% rate, whether it's the natural rate we are going to talk about. You know, many people say deflation is worse than inflation, but inflation has to go in a predictable way. Now, this is Taylor's role, and Dr. Yahya is going to talk about how the inflation, federal funds, the short-term interest rate is being targeted. But the point that is important, we already know, if you're a student of monetary economics, there is a Milton Friedman, inflation and monetary phenomenon. But there is a new theory coming up, John Cochrane, he was University of Chicago professor. He said the fiscal theory of price level. He argues that rising rates to fight inflation is a crude tool, especially when the source is fiscal policy. He compares keeping fiscal policy loose and using higher interest rates to control inflation to a driver accelerating and braking at the same time. He argues, in effect, if people start to doubt the government's commitment to repaying its debt without discount from inflation, inflation could get much worse. Given this thing, what is the connection of Islamic finance? My understanding and reading, this Islamic inflation is a big problem both in conventional and Islamic finance, if you look at from this perspective, but the solution are different. So Islamic economics is, this limited borrowing is more equity than debt based. There's a prohibited risk transfer and speculative demand, control money supply, fractional reserve banking is not allowed, productive financing, not allowing natural resources to stay unusable, equal distribution and cursing hoarding, reduce inflation in demand, and remedy not only inflation but also deflation. And conventional economics, they have only one, playing with the interest rates. Now, given this, so both are concerned about inflation, but Islamic economics solution inflation is more for a long term than a short term. Instead of increasing interest rate to fight inflation, in the short run, in Islamic finance, government can limit the money supply and limit debt to fight against inflation. Islamic finance does not allow speculative borrowing, which artificially increase the asset prices. It is less likely to finance risky projects in Islamic economics related to conventional economics. That financing is limited, which is taken to the main reason of inflation according to Cochrane, the fiscal theory of price level. Islamic finance requires to finance only for productive reasons, which increases supply of commodities and goods and services. And Islamic finance does not allow to keep resources unused, which also encourages to produce and increase supply. And Islamic finance not only fight against inflation, but also deflation. The fight against deflation is not done through decreasing interest rate, but more equal distribution and decreasing and hoarding. So given these things, I want to quote, before I give the mic to my esteemed speakers, Al-Markezi was an economist from the mid-century. He said the inflation can rise due to natural factors like famine, disaster, war, and too much money coming from abroad. When this happens, government should directly intervene and take the necessary actions. Inflation can also arise from human errors like corruption and poor administration, excessive taxation, and increased circulation of currency money, speculative borrowing. These are less likely to occur in Islamic economy. Given this background, now I want to switch to our esteemed panelists. I want to start with Dr. Yahya Abdul Rahman. So those who do not know him, he has a PhD in engineering, but he has started this Lariba banking in the United States 20 plus years ago. So he's genuinely called the father of Islamic finance in the United States. And so let's give him the floor to to hear his wisdom about this issue. Dr. Yahya.
Bismillah ar-Rahman ar-Rahim. Okay. I just want to share with you what we do in our bank as far as indexation. Why is indexation important? Because in long-term financing of commercial products, the Islamic banks used to use an index called LIBOR. And the index was used for political reasons in our love to the colonizers, England. We never used LIBOR because it had its own problems. We used in the United States the Wall Street Journal published rate, and that published rate for prime banks, we call it Wall Street Journal Prime, which is equals to the Fed fund rates plus 3%. So the Fed fund rates now is 5.25% plus 3, then the prime is 8.25%. Now, what we have done in the United States, they kept looking for another index, and they came up with something called sofr. In Turkish, sofra means table, so I remember it by table, sofra. It's S-O-F-R, which is called secured overnight. This is S-O-F, financing, R, rate. And this has to do with the rate which banks charge each other to balance their sheet every night. Now, that rate actually has to be collateralized, that's why it's called secured, by a treasury bill. So it's an interest-based index, and we do not like interest-based index because we are an Islamic bank. So, next slide, let me see if I can run it. Well,
you have to hear.
Huh? Yeah, but I don't know how to. Oh,
Yeah,
now
it's
it moved. So first of all, I would like to show you a very simple definition of riba. Somebody asks you about riba. Riba is the act of renting money at a price called interest rate. And money is fungible. It changes its nature upon use. If you have $100,000 in 1971, 2,850 ounces of gold, because gold then was $35. Today, gold is $1,900 an ounce. That means the $100,000 today is worth $5.4 million. And that makes dollars and euros and paper money as fungible. So we do not use it as the Prophet ﷺ did a long time ago when he did international trade and he came back with different currencies. Before he left, he converted it into one of two things, either gold and silver, which what we call the pricing commodities, or food staples that are needed back home in Mecca, so on and so forth. So, and I wanted to say in Arabic and English because it breaks my heart to be in an Arabic-speaking country and we speak in English. So I wish that we can respect our language, which is the Arabic language, the language of the Quran. But anyway, هو تأجير النقود بسعر إيجار يسمونه سعر الفائدة. Now, we also use a new branding for riba-free banking, and we have operated in Kazakhstan, in Egypt, in the United States, of course, for a long time. And based on our experience, we did not want to call it Islamic because we wanted to be open to all people of all faith. Our goal is to provide a window on who the Muslims are when they deal. They deal equitably and honestly, and that's why we call it riba-free. And in the Old Testament, riba is called ribit, and we have done tremendous research on the prohibition of ribit in the Old Testament, in the Talmud, and in the New Testament, and of course in the Quran. So what we're promoting now is RF banking. RF stands for riba-free banking. It also stands for ribit-free banking. And for those who do not want any religion in their life, we still are approaching them because Allah subhanahu wa ta'ala changes people's hearts and makes them Muslims, inshallah. We call it responsible finance. On the next slide, we talk about the SOFR or SOFRA. It's called Secured Overnight Financing Rate, and I said it is based on interest rate. And the Wall Street Journal, we spoke about it in the beginning. Now, here is a fact. The fact is that most of the currencies, if not all the currencies, are pegged to the United States dollar. So when the United States gets cold, the rest of the world gets pneumonia, which means if the United States increases its rate, every country will have a problem of devaluation of their currency. Now, the United States actually use what we call fiat currency. Fiat currency, which is currency which is not covered by gold. But we have done a lot of research and we found that behind the curtain in the Federal Reserve Bank, they actually manipulate the rate of exchange based on the value of gold in international markets. And for your information, gold does not have an open market. That's a fallacy. Gold prices are controlled by 5 major banks in the world. And if you're interested, you can read my book on the research we did on that. And I'm saying this because my goal, my dream is to see a riba-free national bank, a riba-free central bank. And I'll tell you what I'm looking for. So the United States manages its money supply. And the objectives is to change the money supply to control 2 important things. And that is inflation and of course job the job market, which is employment. Now, the question is the Fed fund rate an interest rate? I believe not. And that's why the Fed fund rate is the best reference to index your operations accordingly. Now, this Fed fund rate is designed for the United States, but you can also adapt it and improve upon it to fit your local situation in Pakistan, in Nigeria, in Lebanon, and so on and so forth. Now let's find out what is that equation is all about. Professor Taylor at the University of Stanford in 1971 came up with a wonderful equation called the Taylor equation. And it consists of how you calculate the best Fed fund rate to achieve your goal. That equation consists of 3 pieces. One piece is the change in rate of inflation that you are actually achieving. Suppose Pakistan decided to say, I want to keep inflation at a maximum of 2%. So that number is 2%. And then the second thing is the change in the gross domestic product. If the government, central bank, calculates the gross domestic product to be 3.5, and you think that it is going to change to 4.5, then you have a +1 increase in the gross domestic product. And then the last one is what we call the assumed steady state real interest rate, which is 2%. In Islamic banking, that is the number you want to decide on as a fair profitability of the project that you want to finance. And the total of this will give you the Fed fund rate. That Fed fund rate actually will be the tool that the government will use to control the amount of money you print or the amount of money you take out of the market. Now, if you don't know it, you're all bankers. Anytime you approve a loan, in fact, you are participating in the process of printing money. You don't print it in paper, but actually authorize its growth on numbers. And so that's it. Now, I'm sorry I don't have much time to explain, but that is what we do. This is a chart we'll talk about it later on. So that's the first part. So you decide on the Fed fund rate as your index reference. But then the second thing, we want to make sure that when we finance a project, that it makes economic sense. And that is by going back to the pioneer of the first monetary theory in the world. His name is Muhammad sallallahu alayhi wa sallam. He had a wonderful hadith, I call the commodity hadith. It took me a long time reflecting on what the Prophet sallallahu alayhi wa sallam said. He said that if you want to calibrate value in the market, there are 2 methods, 2 references of calibration. Gold and silver, or now platinum or rhodium or whatever precious metal is, and food staples, food that is necessary for you to stay alive. And he said that because these are references, you cannot allow in your economic structure and policy these to be participants in the futures market. In other words, in an Islamic economy, there's no futures market for gold, there's no futures market in silver, no futures markets for food, and so on and so forth. So if you have dates, suppose you have 20 days, and you want to get large dates. You don't go out and exchange 20 for 5. That is haram, that is riba, based on the Prophet's rules and regulations. What do? You go and price the 10 dates in the market using gold and silver or another commodity, and you get the proceeds and buy the large dates. This way you can balance the markets. So that's exactly what we do. We go out and check how much would the house that you are buying can rent for. And we ask the customer to give us 3 estimates of the rental rate in this particular neighborhood, and we get 3 estimates ourselves, the credit analyst. Now we have 6 databases, and we get the average rent. And all riba-free bankers, and I'm sorry to say, many Islamic bankers are using the amortization schedule. Am I correct?
The amortization schedule, what is the amortization schedule? It's the rental of money. You put $500,000, you rent it to the customer at a rental rate of 5, 6, 7, or 8% for 10 years, and the unknown is the monthly payment. We do exactly the opposite. We have our own proprietary program where we say we're going to invest $500,000 for 10 years, but we know how much is the expected income from that investment, and we put it in and we get a percentage sign. That percentage sign is the rate of return on investment of this particular property. If the rate of return is high, 12%, 15%, we tell the customer, Mr. Customer, you picked up a property which makes economic sense, and we are going to invest with you. If the rate of return is 1%, tell the customer, Mr. Customer, there is a bubble economy pricing in this particular area, and this price has a very, very high value, and it is much more overpriced. We cannot invest with you. Have we done it? I swear we have done it many times. For some significant people, and they were offended, but we told them this is the discipline we use, which is the discipline of the Prophet ﷺ. And then there is a third possibility whereby your rate of return is marginal. So we tell the customer you can go out and renegotiate the price, and we have done it also many times. Now, we calculate, I'm almost done. We calculate the monthly payment, and based on our own algorithms, and we compare our monthly payments to the monthly payment that Bank of America and Chase and others would do, because we are not market setters, we're market followers. And if it is higher, our numbers are higher, we voluntarily reduce the rent such that we can compete with the riba-based banks. Why? Because we do not want to be accused as riba-free banks as more expensive than others in the market. And then we do the deal accordingly. I'll give you an example. This is the price of gold in the market. This is the price of a home in the United States. And look at that. You'd think that home prices keep going up, but look at it in gold. So we take the dollar out and we ask ourselves, how much house would you buy for so many ounces of gold? This is what we get. Amazing, amazing. It doesn't go up all the time. Somebody behind the drapes, behind the curtain, is actually manipulated the price of gold, so it goes this way. And that's how we actually decide on, I'm sorry, how do I go back? That's how you decide upon if there is a price bubble. You see this thing here? This is a bubble. The thing up here is a bubble. Down here is a great time to buy. As a matter of fact, we detected the bubble in the United States 1 year before it happened. And many customers thought that we don't know what we're talking about, and that's why what happened has happened. Quickly, that's essentially what I have.
Thank you, Dr. Yahya. Thank you very much. So thank you explaining how the riba-free banking works in the United States. So I want to call upon, because we are limited by time, our next speaker is Dr. Zahid Rahman Khokar. He has a PhD in Islamic finance. He is the former Assistant General Secretary of IFSB, and he is also right now working for Central Bank of Oman as the policy department. So Dr. Zahid, please look at your time, because we have to finish before Maghrib. 8 to 10 minutes.
Yeah, thank you. Bismillah ar-Rahman ar-Rahim. Good afternoon to all of you. First of all, let me thank AAOIFI for inviting Central Bank of Oman and myself to present in this session. So, Professor Kabir and Dr. Yahya, you have already discussed some dynamics of high inflation rate and high benchmark rates. I decided to start from the more basic first. And so we will discuss more on the economy and impact on how the benchmark rates are happening. But one perspective is that which benchmark rate we are talking about. If we talk about Islamic finance, benchmark is essentially an interest rate benchmark. So why we're talking about an interest rate benchmark in an economic system where Islamic finance has grown in many parts of the world. So first thing is that we decided at the start that Islamic finance will be a new niche which will expand and it will move forward. But one important thing is that you are never able to move around from the place where you started. If you really want to make it a separate market, you really find a way to detach yourself from where you started. So I will share with you some of the things which may think us helping to detach from these conventional benchmarks. There's a very interesting theory it is called ecological niche theory, in which it is mentioned that if any market, if a small niche started, how it can become an independent thing. So it's a very interesting theory, but I will just mention to you some of the points. One is that you start, of course, you are part of the big picture. You start at a small level. You are small. Then you move, you grow, you start a competition. Then you specialize. So first thing is you start specializing slowly. You start bringing the new, customers who want to be part of you. The second thing is you want to bring the innovation. So first you specialize, then you innovate, then you get acceptability, and finally you bring the acceptability, wider acceptability in the market, which allows you to make new regulations for you, more acceptability for you, and you can actually move towards a totally new market. Now for benchmark rate is a very, for you, those of you who are practitioners in Islamic finance, in almost every conference this point is discussed. Why Islamic banks have a conventional benchmark? And this question, and always, Sharia scholars and all the experts tell, it is a starting point, we are starting, so we will move towards slowly. And this was a point, AAOIFI Academy has a meeting 30 years ago, 1993. And one was a resolution was that Islamic finance industry should expedite prompt action to find a Sharia alternate to the conventional benchmark. And in one of the books, Sheikh has mentioned, we are accepting it is permissible, but something must be urgently done to move towards, the new benchmarks in terms of Islamic finance. Okay, now what is happening on the ground? One argument is that Islamic finance is in infancy stage. It is the infant, we are in infancy stage. And Islamic finance is now 50 years old. So would you accept an infant who is 50 years old? It is not. Islamic finance has grown. It is one argument is it's a very small market share. Is it really? There are 2 countries in the world which have 100% market share. There are 3 countries which have 50 to 80% market share of Islamic finance, Islamic banking specifically. 6 markets have 20 to 35%, and similarly 4 markets over 15%. But there are about 15 markets which have market share of more than 15%. So is it really a small niche starting market? It is not. One argument is we are in transition. We are in that phase, we will move towards that. It is true we are in transition, but if some progress is being made, then we can expect something to happen. But if transition is not being made, then we are still at the starting point. And finally, one argument is that because people are familiar with interest rate. If a customer wants to get a loan, so it's easy to give a same benchmark what a conventional is giving, so they understand it better. But again, something has to be done to increase their knowledge. Okay, why it is happening? One, if you look at this pie chart on your left side, this is a global Islamic banking data. I've taken from IFSP's latest data. It is from all Islamic banks in the world, and this is showing the asset side of it. Okay, what is the data? That around 47% of the asset side of the balance sheet in the world is murabha, which is a fixed rate contract ultimately. Another around 1/4 of it is commodity murabha. So 75% of the balance sheet of Islamic banks is locked on fixed rate, commodity murabha and murabha for that matter. Then you look at some diminishing mushaka, Yara Muntahiya Battamlik is there. Again, some are floating rate, some are fixed rate. Even wakala is happening in some market, mushaka is happening in some market. But if you go detail, actually they have tried to make it close to the actually conventional benchmarks. On the right side, in this graph, you can see the spook market. And spook market, historically, we know it is very closely impacted by the macroeconomic environment. It is very closely impacted by the Fed rate. So ultimately, whenever Fed rate has changed, it has impacted the spook market issuances. And there was an attempt by Thomson Reuters, very useful attempt. They worked with 18 banks and Islamic banks and windows, major one in many regions. And they tried to come up with an IIBR, Islamic interbank benchmark rate. And this is the data from that. This was a 6-month short-term interbank rate. And they tried to get the data from these 18 banks. And if you look at this data for a few years, it is very, very closely linked with the conventional Fed rate. So it is not very, it was not very independent from that perspective because everything is closely linked to conventional benchmarks. Okay, now quickly, I have few minutes. So just quickly, one is, one attempt which has been done at a very, by the AAOIFI. I just want to share some findings of it. This draft standard is already out. It's in the public and some, you can read, you can download from the AAOIFI website. So it was a very important working group which was chaired by Professor Kabir. Professor Kabir has worked with many academic people, some central banks for their Islamic Development Bank Institute was there. So there was like quite powerful working group was established for this thing. So they came up that there are 3 possibilities that you can have different type of benchmarks. You can have specific benchmark, you take microeconomic variables. You take growth rate in specific sectors, you take ROA, ROE of some sectors. That's one way of doing it. Second, they said that you have a general benchmark based on macroeconomic, GDP, GNP, and wholesale price index and CPI. That was the second option. Third option, they said that we can use just Islamic finance data, that market data, and then we can use it to price the Islamic finance concepts. So these are 3 possibilities. You take microeconomic data, you take macroeconomic data, and you take Islamic finance market data. Okay, and there was some suitability criteria that if you want to make a benchmark, it has to be reliable, it has to be in a specific currency, it should be specifically for a jurisdiction. You cannot make a global benchmark at the moment. And you have to have a transparency of inputs, etc. There are a number of criteria too, if somebody wants to have this. Okay, now technology is one of the things, for example, in this one, I'm sorry, let me go back. This one. So one option was that you take the specific sector, for example. You take, for example, there's a mention of prices or rental prices or sale prices in the housing market, for example. Now this is of course a big job to get the data of at what rental prices houses in every area in the country, at what prices houses are being sold, they're being rented. So I just give you how the technology is helping this thing. Sorry.
Yeah, Dr. Zahid.
Just 2 minutes. Okay, this is the data. I've taken this from Zameen.com. This is one of the property, sale and purchase website in Pakistan. And this is an index. They have created index for each area. And you can choose the city, you can choose the area, you can choose the type of property. It's a rent or it's a villa or it's a apartment. You can choose the objective of property you want to sell, you want to rent. And you can actually find immediate for last few years, you can find an index for that area. So that's a very interesting development. That technology automatically, it's not for Islamic finance, they are doing it for their own business, but actually you can find index for any area in the country at what price they are doing it basically. And finally, this is just one of the options which can be thought about. My final slide, the idea is that first of all we have to start at the country level first. It cannot be done at the national, for an Islamic finance world you cannot start from the global level first. So you have to start from a national level first, and then you have to use technology if you can in some places. Secondly, in Islamic finance, central banks have to give some room for experimentation. because everything is benchmarked against the overall national rate. So you have to give some room to the Islamic banks if they want to test for some specific product. So only then things will start developing. That's one way of doing it. And of course, monetary policy is a bigger area where central banks, as a central bank, we need to look into. And I can tell you very little research is happening. There are some papers coming, but these are mainly academics. It's not by the central bank research departments, etc. So monetary policy is a big area which needs some development in this area, and I hope that things will move forward from monetary policy, because that's the bigger area. If monetary policy can be set to Islamic mechanism, then things will be easy for all Islamic banks. And finally, we cannot expect a perfection at the start. We have to start with very small thing. We need continuous improvement, and hopefully we will reach to a perfection over time. Thank you.
Thank you, Dr. Zahid. Just to abreast you of the development of benchmark Islamic alternative to conventional labor, because labor is going out of phase. So there is a group, and as you mentioned, the exposure draft, you can read this. So we have analyzed different markets, how we can come up with, and finally settled on two ways. One is real economics micro framework, like the example Dr. Yahya showed, the rental index, and also Dr. Zahid. The other one is real economics macro benchmark, that we deal with the GDP, expected inflation. Dr. Sami is not here. He has, the Islamic Development Bank also has come up with an idea, so we are analyzing those things. Given these things, our third speaker, let me move to Ghulam Muhammad Abbasi. He is the Director of Islamic Finance Policy, State Bank of Pakistan. He has been there for many years, 25 plus years, and he has been involved in all aspects of Islamic finance development in Pakistan.
Thank you. Thank you, Chairman. Bismillahirrahmanirrahim. First of all, thank you IOFI and ISDB for inviting me here as a panelist. And also I'm thankful to the audience, because it's very difficult, I understand, to sit a whole day, and you must be the senior people as well. So I will try to quickly cover the impact and the opportunities area of the higher benchmark rates in the current scenario. That is, how does it impact Islamic finance institution especially, and then what are the opportunities for the Islamic banking institutions. As we all know that these high benchmark rates are the result of the Russia-Ukraine war, then supply chain disruptions, and food and energy crisis, that is the disruption in that. And that's why every central bank, instead of going for the growth, their focus went towards the stability and the price stability, and that's why the interest rates rises due to the high inflation to control that. But this high inflation remains stagnant, and many of the jurisdictions is still there, and it is expected it will remain there for about 2025 until then. And then in order to have an analysis on the impact, how does it impact the balance sheet of the banks, we need to understand that what is actually the composition of the specific balance sheet on the asset side and liability side. If you go on the asset side of any banking industry or any bank, on the asset side they have got the financing and the investments. Due to the high interest rates, of course, they have got the NPL, they have got the provision expense as well. And the IMF in its recent report also in 2023, October 23, have highlighted that due to the higher benchmark rates, the banks, especially the micro and SME sector, they have their cash have been eroded, the erosion in the cash buffers, and simultaneously there are infection and delinquencies in the SME portfolio, in the auto loans. In many of the jurisdictions where the mortgage rates are the floating rate, the real estate market has also went down. So of course there's on the finance side, these are the issue. On the investment side, those banks which have, because they are available for sale or the held for trading or the held to maturity, depending upon what type of classification you have booked your investments. But here the situation is that the deposits are equally on the liability side, equally linked with the investment portfolio as well. Because if you have got the core deposits, that is sustainable deposit, having got the insurance cover, those probably will not move. But rather, if you have got unstable or uninsured kind of a deposit, as in case of some of the US banks, then if there are market reports regarding delinquencies due to the high benchmark rates on the asset side, then you need to liquidate your investments and you incur the losses. So I think this is the area where the banking institutions need to manage their asset liability, that is rate sensitive assets and rate sensitive liabilities on the both side. Simultaneously, we know that the impact on the liquidity side, on the solvency side, if we discuss that in Islamic banks, as we all know, that is they mobilize deposit at the short term, but they place it for the assets at the long term, that is on the, say for on the housing or the long term assets, they book the long term assets, but mobilizing deposit is on the short term basis. So this is one of the area, and the contract is different. Deposit side and the liability side is on the profit and loss sharing basis, while on the asset side mostly on the debt base. So there is a mismatch here. So any higher benchmark risk directly impact in that scenario as well. And also I would briefly talk about the Pakistan here, that is in Pakistan's State Bank of Pakistan's overall. Our markets financial sector is well stable. Our capital adequacy ratio is around 19% of the banking sector. We have around 32 banks and 28 banks, commercial banks, and 4 other foreign banks. We have more than 4,600 Islamic banking branches, which constitute around 27% of the overall banking branches, that is 16,000 branches. And during the COVID and the post-COVID, that is the benchmark, the same goes with the Pakistan as well. We have increased our policy rate 15 percentage points from 7% to 22% during this, since September 1.5 year, September 21. And then infection ratios are well controlled. The provision to NPLs is covered by around 96%. On the Islamic banking institution, and same goes with the conventional as well. Regarding benchmark rates of the conventional and Islamic, because Islamic, as Brother Zahid has also explained, that Islamic banking industry is at the initial level, at the infancy level, so the same benchmark rates were used. But of course, I would, in my view, I think Islamic banking industry now in many of the jurisdictions have reached to a certain level where we can go towards alternate policy rates, alternate benchmark rates, and move towards more participatory mode of financing, delinking with the benchmark rates. So the different research studies are being conducted, and I'm hopeful that as the market will grow, and Dr. Humayun Darve explained, there are markets which will also transforming completely towards Islamic, and Pakistan is one of them, because after the Federal Sharia Court judgment, Pakistan will transform whole its banking system into the Islamic by December 27, and we have working very aggressively on the different initiatives. Thank you.
Thank you very much, Brother Abbasi. It's a very interesting paradox. In conventional frame, that when the interest rate is low, the banking sector makes the most amount of money because the net interest rate is very high. But the data that Humandar is showing, that when the interest rate is high, Islamic bank's profit is high. Probably paradox we can resolve because more connection with the asset side and the liability side. So that's the reason, could be a possible reason. Having said this, let me come to our last speaker. So we have two engineers in our panel. One is Dr. Yahya, and our second engineer is Dr. Shahin Shayan. He's an Ivy Leaguer. He went to Columbia University, very accomplished soccer player. He mentioned in his short bio. So without
the engineers are taking over.
Taking over. Actually, the whole finance industry, academia, actually ruled by the engineers. They come from engineering background. So without further delay, please, Dr. Shahin Shayan.
Thank you. Well, Bismillah ar-Rahman ar-Rahim. Assalamu alaikum rahmatullah. I find it very challenging to speak as the last speaker in the last session after a big lunch. So I hope you'll bear with me. I can see you're all tired, so I'll try to make it as exciting as possible. Let me get to the point that I'd like to present to the audience. I come from a bottom-up background. I used to work for Goldman Sachs in New York for many years, worked for banks in the United States, worked for investment companies in the Middle East. Now, as I'm older now, I'm a consultant. So I look at the world from a top-down perspective, from like a helicopter view, as they say. I've been working with IDB for many years with Brother Sami, which I had the great pleasure to be a friend and a colleague for many years as lecturer for IDB. So I thought, what's the best way to describe the topic of this last session? What can I bring to the podium that would help the audience get some additional perspective? The issue of having the right Sharia compliant rate is absolutely important, and I think it's a lingering issue still. In the Islamic finance world, we haven't been able to come up with an all-inclusive, global, compliant rate that we are all happy with. A rate similar to, let's say, LIBOR, US Treasury rate, which is almost like a global rate. I like to take a step back and say, why has LIBOR or Eurobor or US Treasury been so successful? It's an all-inclusive rate, it's global, it's highly competitive, meaning it's an efficiently determined rate through huge, diverse, and deep supply and demand that determines it on an instantaneous basis. And it's something that's simple. It's easy to understand. In the Islamic world, we have come up with all sorts of rates in different countries, but these are local rates. That region, that country, that's good, but that's not enough. We have had this discussion in the past in terms of maybe we can develop the sukuk market, the global sukuk market, and that could be a reasonable proxy to be used as a rate for all global financings in the Islamic world. If you want to issue, let's say, an infrastructure sukuk on a global basis, you can use the sukuk market as a benchmark, as a base. This issue has I think it still needs to have a lot of work to be done in it. We haven't done enough. We have to do something about this. Otherwise, we're always somehow tied to LIBOR and US Treasury. Now, having said this, as the base of my discussion, which I think is absolutely important to have, what I'm looking at now is more from a managerial point of view. What really happens when rates go up, even go down? But our point here is when rates go up, the benchmarks go up, be it Islamic or be it non-Islamic. When rates go up, you have shock to the system. Now, the rates can go up. I guess if I have this thing that I could, do we have the?
It is next.
The pointer? Thank you. I think you're all familiar with the yield curve concept, which is called term structure of interest rate. I like to call it term structure of expected rate in the Islamic world. When we deal with rates, we are not looking at one rate. We're looking at this whole series of rates for different maturities. If you're an Islamic finance expert, I'm sure you understand if you want to price a contract, an Islamic contract, or value it, and it's a 6-month contract, the rates that can be used for that are different from the rates that are going to be used for a contract that's a 5-year contract. And this is exactly what that term structure is referring to, which we call in the non-Islamic world a yield curve. I hope. Yeah. This is the shape of a yield curve, a normal yield curve, meaning as you go up the maturity curve dimension, rates go up because risks are higher, uncertainties are more, so on and so forth. Now, when we say rates go up based on what we have now, that means this yield curve can change shape. Yield curves change shape. It's like a wobbly thing on a daily basis. Now, the rates can either go parallel up, all of them will go up, or the short terms go up and the long term stays. We call that inverted yield curve. So, now these are different types of curve that we can have. Now think about an Islamically determined Sharia compliant curve. That's what I'm talking about here now. The base that you see there is inflation. These curves are always above inflation, meaning whatever the inflation rate is, it determines that the yield goes above this inflation. Now, if inflation moves up, obviously the curves will all go up. If inflation goes down, the curves go down. Granted that Dr. Kabir did mention there are many other factors that come into play in terms of how this curve is shaped above inflation, but inflation is an important factor in the picture. Now, what I like to do is to look at two scenarios in terms of yield curve or expected Islamic index rate curve, if you want to call it, or whatever you want to call it. I'm talking about this yield curve that's pertaining to Islamically based indexes. Either short-term can go up, which means short-term rates will go up, or short-term expected rates will go up, short-term expected profits would go up. If that's the case, I call that scenario one. In scenario one, usually causes an inverted term structure curve. It usually happens due to short-term crises, short-term conflicts, social turmoils, and etc. This is supposed to be a short-term effect. It's not supposed to last like this because it's not normal. When you have an inverted curve, it's like there's some sort of a stress into this dynamics that's pushing it up, and it's going to come down sometime. When, we don't know, depends on the situation. Usually under 1 year. Again, I'm speaking strictly based on experience. I used to be an investment portfolio manager of one of the biggest banks in the United States for many years, managing $12 billion. And that was my concern every day. I was looking at this yield curve constantly, how it's changing, and then I had to reshuffle my portfolio accordingly. That's how you hedge yourself, that's how you immunize yourself, that's how you protect yourself. So this is an inverted yield curve. Now scenario two is short, medium, long rates will all go up. These are the expected rates. Now, when you have this kind of situation, there's this upward shift in the term structure curve. That's a little bit more dangerous. That's a little bit more worrisome. It usually happens due to an overall increase in inflation rate, poor economic policies, wars, expected economic structural problems, and etc. It's expected for this type of rate to last a little bit longer. And when that I'm running out of time, huh? Okay, I'll finish it soon. So I'll show you this quickly. That's a parallel up. Now, impact of, I have one more slide and I'll be done. The impact of short-term increase in benchmark rates on Islamic financial institutions, scenario 1, increases short-term expected cost of Islamic deposits and funds, obviously, because it's a short-term jump up, and you want to borrow short-term, it will cost you more. It will increase short-term funding cost. To stay afloat, they must concentrate and focus on short-term assets. They got to build up their asset side so they can compensate for this additional cost. Assets will be also lent out at a higher rate. Now you need an ALM kind of management involved here. Definitely, you need asset liability management structure in place to manage these imbalances on your balance sheet. I'm not going to go through the details. I'll send you the files if you want. You can see, but basically a management expertise is required when the yield curve is inverted. You have to be careful, you adjust your balance sheet accordingly. For the second scenario, which is parallel shift up, which is more longer term, total cost of funding goes up, everything. And again, this is where I like to emphasize my last point. What you need to do in this place is to look for additional sources of funds, because your cost of funding is going up, which means you have to find more diversified ways of financing, which means you have to lower the cost of your fundraising, cost of your operation, which means you just have to change the dynamics of how you do things. This is where fintech comes in. Fintech allows you to diversify your approach in terms of how you raise funds, where you raise funds, you access and tap new markets for fundraising, new banking, open banking, all the stuff that we heard before, microfinancing, SME financing. These are all like windows of opportunity that you can access to and use fintech to kind of access funds and also invest funds, both sides. So in an environment where we are right now, which all the projections say rates are going to stay high for a while, I would say emphasis on fintech, technology is absolutely important in the short term and also long term. It would allow you to be able to find new opportunities, new sources of funds, new dynamics, and also inclusivity, helps you be more resilient, more stable, and all these good words that have been thrown out during the day. So I guess, having said that, scenario 1, more focus on short-term asset build-up, longer-term funding, and balance sheet restructuring through proper ALM. Scenario 2, focus on overall asset profitability increases, and utilization of no branch banking, fintech, AI-based approaches such as InsurTech, all the stuff that have been discussed so far. Now, this is where regulators can help. Now, I have to tie this out to the regulation side. Regulators can help promote this concept. That's where they have to come in and help. They shouldn't kind of stop you from doing things. They should help you and promote this whole concept. Now, this is just the last slide for you. In the fintech environment, AI, decentralized finance, open banking, digital banking, these are all important issues that somehow Islamic financial institutions should focus on, I think. And no matter what happens to the rates, this is the way to go. Thank you.
Thank you, Dr. Shaheen, for a wonderful presentation. Just to recap, increasing interest rate, the policy that is followed by all central banks, can decrease inflation in the short run, but does not work in the long run. There's a new theory came out by Professor Cochrane, as I said, the government does not pay if the government, because if you look at the balance sheet of the government, each country, high internal and external debt. So with a high indebted country and a restrictive monetary policy is not going to work in the long run. It may solve the problem in the short run, but it's going to keep up in the long run as long as we do not manage our the fiscal policy of the government. Having said this, so it's wonderful. Technology, fintech can help the process-wise, but we need to find alternative source of financing. So when you look at Islamic finance and all the bad names we get because from the Islamic commercial finance, but we are neglecting the huge area of Islamic social finance. So we have to get resources or funding or the source of capital from other than the Islamic commercial finance. Of course, fintech can help this side, but the other side we have to really recap and we have to bring this together in order to have a more diversified pool of funds, and this is what Islamic finance tells you. Now, the conventional policy of taming inflation in the short run cannot be used Islamic finance industry, and we should not. And all the emphasis by all the authors, Islamic economic solution to inflation is more structural by prohibiting debt financing, speculative borrowing, prohibiting interest rate, and involving productive financing and controlling money supply.
Can I just add one thing, please? It's very important to know that Islamic financing does short-term financing and does long-term financing. The reason we're indexing is something that we learned in the 1980s when interest rates in the United States reached 20%. Bank of America was going to go bankrupt because of that. So we started the idea of indexation. If you have a loan that's 10 years, then you put a base, which is, let's say, 6%, 7%, and then you index it. You fluctuate it based on the money supply. That's why we have indexation, just to make it simple and easy. I like KISS approaches that keep it simple and stupid. I don't want to go into theory. I just want to share with you the real facts. Real facts are, we do short-term financing and long-term financing. And if the government fails by increasing interest rate, then you give it the shock approach, which Paul Volcker did in the 1980s. Professor knows about that very well. When rates went to 20%, the whole market stopped completely. And it takes not 1 year, as we heard, it takes somewhere between 2 to 3 years minimum. And this time, it will take much longer because we printed a lot of money during the COVID crisis. Thank you.
Thank you. So the point I'm trying to make that Islamic finance solution is a sort of a long-term solution. Again, I do emphasize all the points taken very seriously, short-term, long-term, how indexing, but we need to expand the source of financing. And with the banking system, the 70% is Morabha banking, is pretty much balance sheet very similar to conventional banking. And we want to find out an alternative to conventional benchmark, which Taki Usman, everybody is saying, every conference I go to. So we have to look at the other ways of looking at this thing and delinking. So this slide, I just want to tell you, I mean, we have done some work at the AAOIFI level. There are 4 different options we looked at. And some of the options that the panelists talked about, the option 1 is interbank financial market benchmark rate. And there is a proposal done by One Solution International Islamic Financial Market, which is based in here in Bahrain. The option 2 was Islamic interbank / financial market benchmark. So bottom up, all the yield curve Dr. Shaheen is talking about, deriving rates for the sovereign Ijara bills. Option 3A, real economies macro benchmark, and this is something Dr. Sami and his team did in ITI, expected nominal GDP growth rate. And there is another one, Professor Anwar Aznan Hassan, the expected GDP growth rate premium, and then also have the seasonally adjusted output price index. The problem that we are facing of all of these things right now in the second phase, the data, the frequency of the data, consistency of the data. One of the reasons the IBOR failed, that Thomson Reuters, This is very subjective, data was not, and it was not taken by most of the central banks. Having said this, I want to come back very quickly just to one question for each of you for the sake of time, and then I will open up the floor for some questions. So let me start with Dr. Zahid, if you don't mind. So can you talk about what are the major experiences of global economy during the past century or so, which have been characterized by a combination of high benchmark rates and high inflation, and what was their experience? Dr. Zahid.
Yeah, just shortly, I mean, this is not the first time it has happened that, high inflation has come and high interest rate has come. So we have seen in US, for example, in 70s and, mid 70s to early 80s, this has happened. It has happened in Brazil, it has happened in Chile, it has happened in New Zealand. So there have been many, instances of this scenario. Now it's not one policy tool. One policy tool is the multi-policy tool. The central bank start raising the interest rate. So that's one way of doing it. But this is only one of the overall, package which you have to do. Second, the most important part is governments have done is a fiscal policy, that you have to control your budget deficit. You have to bring new tax revenues if you can. So the control over the fiscal side is very important simultaneously alongside with on the multi-policy. Then many countries have done a bit more of exchange rate management, It's not a free exchange rate, but they do some exchange rate management to try to reduce the depreciation of the currency. But again, it is dependent on whether the country has sufficient reserves to actually intervene into the exchange rate market. And then supply side policies are also there. You have to liberalize the economy. You have to do something for the trade, better trade, so you can earn more revenues. You have to come up with some reduced regulatory barriers, for example. You have to bring some efficiency to the markets or whatever, structural reform you are needed. So it's a mix of four things: multi-policy, fiscal policy, exchange rate policy, and then supply side, policies. Some countries have gone to quite a much extreme. They have gone to even wage controls, they have gone to rental controls, price controls, but generally they have not worked for a short term. So ultimately it is a multiple, set of tools. And again, experience of various markets have been different. But generally, as we see that, most of the countries have been ultimately able to tame this within 5 to 6 years, except, some Venezuela and this kind of experiences, Argentina, for example. So they have not been able to, do it because mainly on fiscal side, because fiscal side management is simultaneously very important, apart from the multi-policy, just increasing interest rate.
Thank you, Dr. Zahid. Now I come back to Brother Abbasi. Could you please tell me, in a scenario of high benchmark rates and this economic uncertainty that we see, how do you think Islamic banks can explore new business opportunities?
Thank you. I think a lot of debate, discussion have taken place in the earlier sessions on the digitalization. I think as we know that, and Dr. Humayun Dar's presentation was there regarding the higher profitability when the benchmark rates go high. One of the reasons maybe there's no minimum kind of a minimum deposit rate, condition for the Islamic banks from Sharia perspective. That is, you need to, as in the conventional banks, you have got the minimum deposit rate that is interest rate corridor minus certain basis point you have to give to the depositors. So then Islamic banks, if the rate of return is a bit lower, then they've got some profitability. I think this is the time that they should invest in the technology. They should collaborate and coordinate with the fintech companies as well. Because if you look at the adult population, most of them, the ratio is quite high in the OIC countries. And the young generation is tech savvy. They want the efficiency, speed of the operation. So that's why I think this is a time, there's a great opportunity for the Islamic banking industry. Globally, they entered late in this digitalization overall, this network as compared to the conventional banks. So I think first of all, the digitalization is most critical. They should invest and reskill their people so that they can, at the once the next actually AI tools and all this are coming, I think it will support them in this regard.
Thank you, Dr. Brother Abbasi. Now I want to come to Dr. Shaheen. You have touched upon this role of fintech, but could you please say a little bit more that how and what role technology can play in enhancing the efficiency, attractiveness of Islamic finance? So focus more on Islamic finance instruments in a high interest rate environment.
The interest rate environment basically is the ground that you are playing. I mean, it just determines the softness or hardness of the ground. As an athlete, that's what I'm talking about. So I would say definitely as interest rates move up, I like to look at the yield curve move up. General jump of all interest rates in different maturities. My view is you are moving into a very volatile environment. Uncertainties are higher, tensions are higher in the economy. Now, in that sort of an environment, as an executive of an IFI, I definitely will try to emphasize technology, fintech, for not just because fintech sounds good, but fintech because it allows me to have inclusivity, access to many markets that I didn't have access to, small to medium enterprises, which is basically an unbanked market that through fintech will become available for many Islamic financial institutions. Even at the micro level, again, you have access to a lot of funds. You can invest in those markets. So it provides you this whole spectrum of available markets that you didn't have access to. Given the fact that it's Islamic, it fits the nature of Islamic finance also, because Islamic finance emphasizes equity, inclusivity, and helping everyone in all spectrums. So I would say technology definitely is something that has a lot of value, even a lot more value in Islamic finance as opposed to conventional finance, because of that philosophy of paradigm that exists in Islam to cover all sectors of the society. Also, I think it allows a lot more diversity in your sources and uses of funds. It provides a lot of stability and resiliency. These are all benefits if it's managed properly. I mean, that's how they have to look at it.
Thank you, Dr. Shaheen. And finally, to Dr. Yahya, can you be more specific? You have a long experience of developing Islamic banking industry in the United States. But in this rising inflationary environment, rising interest rate environment, how can Islamic finance institution develop innovative product structure? The reason I'm saying this, if you look at Islamic banks all around the world, in terms of product development, we are far behind. And the product development has taken mostly the mimicking side, and that's one of the criticisms that we face. How can we come up with better products that are more Sharia based and just simply doesn't copycat and replicate the conventional product?
I just want to share with you, I'm really troubled by the discussion, because we think that we'll solve all problems by having fintech. You do not solve your problems by having fintech, especially in a developing country, which doesn't know much about digital manipulations. You can be overtaken very easily. The second concern I have is you take the Taylor's rule and you add in a number of things in it and you call it an II index. What's II index? It's a Taylor's rule, Mr. Zahid. It's a Taylor's rule. That's what you're using. Yeah. Except you're telling me you're doing this small and medium business, and well, that's your own calculations. This is a central bank and their job. And answer to your question is, we do not deal with interest. We do not deal with interest. We deal with a very important structure of a bank. An Islamic bank has what we call an amana deposit, which is what we call in the regular banking the demand deposit account. The average level of the demand deposit account is about 15–20%. You cannot invest it. It has to be invested somehow. I believe the Fed fund rates are not interest rates. It is something that the government would create so it can control the money supply. So you have 20% that does not actually get to be invested in the market, but it gets to be invested with the government, which actually fluctuates the money supply. Now, the second part, which is very important on the rates, is that you adjust your rate according to the rate of return on investment. If the rate of return on investment of the project is low, you do not do the project. It's not a productive project. If it is good, then you do it. Then this way, you can adjust your liquidity in the bank accordingly. We've been doing this for a long number of years, and we have not had one single, alhamdulillah, one single bad loan all these years, because we do not use a murabaha to mimic riba-based banks. The reason we're doing 70% murabaha is it's a Mickey Mouse. I'm sorry to say. It's Mickey Mouse. I talk to young men and women who work for Islamic banks, and they come to me and say, Uncle Yahya, it is the same. My manager calls the next door riba bank, and he tells me the rate of return, and it's a rent. It's a rent of money, and renting money is haram. It is riba. It is the riba bi'aynihi. So that is what troubles me. What troubles me also is the sukuk market. The sukuk market is a dry market. It trades by appointment.
But can you say something in a new financial product I'm talking about? We understand the argument.
The new financial products, I'll tell you something. For instance, we have an investment product called a certificate deposit with a variable return. The variable return is indexed to the Fed fund rate because the Fed fund changes the money supply. It has been approved by the government, and it's not a constant rate. And it's been creating tremendous demand for us because it's a variable change. The second question is the rate of return of investing in the market, the money market. How do you do it in an Islamic way? We actually connected to the portfolio we have. So the income from the Islamic portfolio is given to the shareholder, to the investors in certificate deposits. And this way we can offer a clean, honest to goodness, riba-free product, not a Mickey Mouse product. And I'm sorry to be frank about this, because we need to clean our act. Because if we don't, we'll be the laugh of the century. We're using in it the word Islamic, and that will hurt not only us, it will hurt Islam in general. Please do something about this. Thank you.
Yeah, thank you very much. Thank you very much. Mughis, just for the sake, because they are listening to us, I just want to take only one question from the audience. Just one question, somebody, if you can address to any of the panel members. Yeah, please, only one question. Brother Irfan.
Yeah. No, I think very interesting session. In fact, I work from Al-Mai, which is the largest Islamic in Pakistan. We are always debating about finding these alternatives. But one thing which always troubles me in terms of finding a solution is that, there's a law of economics, it's called law of arbitrage, saying that if you are cheap in anything, or if you are very expensive in offering any product or services, you'll go out of business. Because if you're very cheap, then the whole world would come to you, irrespective of the religion or where you are, whatever. And if you're very expensive, nobody will come to you. So either way, you'll go out of business. So I think, divorcing completely from the world norms. In my 25 years with Mizan Bank, we are still struggling. We are very hopeful that, one day we'll find some solution. But I think just to keep my own mind straight, Justice Taqi Usmani Sahab, who one of our colleagues mentioned in his presentation, came for a customer audience once in Mizan Bank, and a customer asked that, using Kybor or Libor, we really don't feel good about it. So he said that until you find a viable solution, so Kybor is effectively, he took the bottle of water and he said that, it's 1 liter of bottle, liter is halal. So if it's wine in there, it's not halal. And if it's water in it, it's halal. So Kybor or Libor is a benchmark. So I think our focus really should be towards finding new solutions for Islamic finance. Because, for example, you go to Singapore and you'll find a McDonald's selling halal burgers as well. Now, to make it halal, is it any different in terms of what it looks like or feel like or price-wise? No. Now, would it make me feel any better if the price in Singapore would be quoted in Saudi Riyals? No, right? So I mean, I don't think we should use our energies too much in something which is not really taking us to increase the scope of Islamic finance and increase the penetration of Islamic finance. Because if we really make it too small, are we doing good or are we doing bad to the industry? I think that's one question which, people on the panel should also consider.
Let me just quickly, I think the session was, high benchmark. So the whole idea that we started this process or project that to find an alternative, even Taqi Usmani said that yes, for the time being, but you have to find a solution. That is the solution you're looking for. Unfortunately, there are different aspects of it, but one of the problems that we face, come up with a workable model as a sample that we can show the industry or to the countries that you can take this as a prototype model, but we find the data insufficiency. Now the question is, yes, I agree with Dr. Yahya that the federal funds rate, the government determined rate, you can use to one of the line of Taqi Usman is fine, but we are trying to find an alternative, and that alternative has become very difficult. But last point that we have our team that working on, there are some criteria we have put in front of us to find a solution to this alternative of conventional, because LIBOR is gone. We cannot use it as a benchmark, right? So what we did, we have 10 different quickly, the principle, the Sharia compliance of the underlying transaction or activity, must. Market relevance and acceptability, the point that you raised, it has to be forward looking, keeping a balance between financial market versus economic reality. It's not strictly based on time value of money, but incorporate time value of economic resources. It data sufficiency, we have to do whatever, if you take the rental or whatever you do financial, the data has to be there. Arbitrage risk management, so people do not high on risk, as you mentioned, and that will be very transparent, and the tolerance volatility. So it should not be too volatile so that we cannot really price this into your financial.
I just want to respond to him. I just want to make a statement to all of you in front of Allah subhanahu wa ta'ala. As long as you have fiat money, there is no pure Islamic banking, period. You have to correct the fiat money. And we correct the fiat money by doing the gold dollar transfer or gold euro transfer. I have done the gold Kazakh tenge transfer and it worked. As a matter of fact, the bankers were sitting in a room and I would tell them something happened in this year. They tell you, yeah, this is what happened, how prices would change. We do not have except fiat money. Fiat money is paper money, which is defined, its value defined by decree of the government that has the power. And we don't need mention names. As long as you have fiat money, there is no Islamic banking. And in the interim, we have to make sure that what we do has the right value. I define the right value by the discipline of Muhammad sallallahu alaihi wasallam. He taught us what to do for the right value. Why don't we use it?
Thank you, Dr.
Thank you very much.
Yahya.
Thank you very much for a very,
So I want to thank all the panel members and the audience
very knowledgeable session.
hanging here and listening to us. And
Please, you can see them outside on the coffee, network with them and answer all your questions. We are pressed for time. Thank you very much, gentlemen. A thoroughly knowledgeable session. Thank you very much. For a group photo, please. A group photo. Ladies and gentlemen, thank you very much for your attendance on day one. I hope that this has benefited you. Please do not forget that there is a capacity building week going on. Over 25 workshops in 4 different languages, including Russian and French, are available from 30 speakers. You have 70% flat discount on any workshop. Please make the best use of that capacity building and all the knowledge that is here. See you guys tomorrow. Assalamu alaikum.